just leverage the internet. And in the same way, blockchain can be leveraged to create all these different things as well, supply chains, and so on. So I want you to rethink the question. I'm going to have my final statement. Whenever I come to these regulation conferences, it's all about how do we regulate crypto? How do we regulate blockchain? But actually, what you should be thinking is not how can we now go and control and regulate this new thing, but how can this blockchain come into these regulatory organizations to achieve all the goals that regulators want: transparency, accountability, and also innovation, and to reduce costs and to provide opportunities to their consumers. Blockchain is, in the same way the internet is a valuable tool for regulators, blockchain is a valuable tool. And if you are stuck on this cryptocurrency idea, you're going to miss this boat. And everybody else is going to get there first. So please listen to what I say. Do your own research. Don't go to social media and watch news to find out what blockchain is. You're going to be misdirected. Find out what the original idea of blockchain was, which is the original Bitcoin. And there are organizations out there who are now still pushing this. Like I said, if you want to know more about the original Bitcoin blockchain, which is achieving all these goals, it's the BSV, just stands for the Satoshi vision, Satoshi being the inventor of this thing. Also, he's totally misunderstood. Everybody thought he was this crypto-anarchist, cyberpunk type guy. Turns out, no, he actually does have a law enforcement background and is actively driving blockchain to become a regulatory tool that can facilitate regulation. But anyway, thank you very much. My time is up. Stephen's going to be chasing me off. I appreciate it.
Look, I'm not going to chase you off. In Nigeria, we don't chase South Africans off.
I can hear you.
Oh, thank you. We'll be waiting.
Thank you very much. Good morning, everyone. It's really a pleasure to be with you this morning. You know, God has a way of doing things. And, you know, as God would have it, we had Lawrence's presentation before the DGs. By the way, as introduced, my name is Dr. Usman Abdullahi. I'm the Director of IT Infrastructure Solutions here at the National Information Technology Development Agency, NIDA. Yes, I am representing my DG CEO, who Lorian talked about. I mean, of course, he wasn't talking about me, rather he was talking about my DG. We happen to share the same surname, Abdullahi, and Abdullahi is a common name in Nigeria. and actually that's the relationship. So it's a pleasure to be with you. And without wasting much time, DG could not make it. He made every effort, but because most CEOs now are, sort of more engaged or immersed into the issue of transition from the current administration to the next administration. So he directed that I represent him. I was meant to be there physically, but at last minute, we were unable to make it to Lagos. And I'm glad with this technology, we are able to be together with you this morning. So I will just go straight into the DG's speech. And it starts thus, that I would like to express my gratitude to Regtech Africa for hosting this timely conference. I am honored and humbled for the opportunity to deliver the keynote address on the conference theme. So the theme is apt and provides platform to discuss and share ideas on the national policy on financial inclusion, consumer protection, and cybersecurity from the perspective of the public sector. And I'm glad too that a number of our colleagues from NCC, EFCC, NFIU, and the rest that we work collaboratively together are there physically that can address, all the other issues from public sector perspective. So financial inclusion, customer protection, and cybersecurity are critical components of a well-functioning financial system, and government must establish comprehensive policies to guide the adoption and improvements of these technologies or these issues, focusing on the areas for the benefit of all citizens, as well as contribute to the development of the broader digital economy. Distinguished participants, ladies and gentlemen, the availability and equal access to financial services are vital elements in promoting socio-economic development, as well as addressing the unemployment challenges we currently face in Nigeria in particular and Africa in general. So you may be aware that NIDA, in collaboration with other regulatory authorities, have been at the forefront of this essential component of the Nigerian fintech system. In Nigeria, it's been progressing steadily over the years. The previously unbanked are becoming banked, with the introduction of several initiatives to increase technology penetration and digital inclusion across rural communities. This facilitated access to financial services such as mobile banking, agency banking, the cashless policy of the CBN, financial literacy programs, and the Nigerian financial inclusion strategy. Mobile network operators and fintech companies are playing key roles in increasing financial inclusion by providing innovative financial products and services through their platforms. Numerous fintech companies and startups providing banking services in an unconventional way, leveraging digital technologies. These days, we have banks without physical branches. Of course, Lorien, like I said, has spoken widely about that. So we have in Nigeria, we have Flutterwave, Piggyvest, Paystack, Bankly, Moneypoint, Kuda Bank, RiceVest, Bamboo, OPay, Cheaper Cash, Paga, and many others. All these innovations have liberalized how banking is done. Another wave of emerging technology that might lead us to redefine the financial inclusion is blockchain. Like I said, it's a blessing that Lorien presented his keynote before the DG's presentation. And he has said quite a lot extensively about blockchain that, of course, there is no point in revisiting that. Now, by using blockchain-based payment systems, individuals can send and receive money easily and securely. As government, one of the key roles of government is providing the enabling environment. And you may be aware that the Nigerian government recognizes blockchain as one of the components that will facilitate the transition from the traditional economy to the digital economy. Hence, the Nigerian government, through the recently launched National Blockchain Policy, provides a framework for the use of the technology, which can help mitigate risks such as money laundering and fraud. You may also be pleased to know that Mr. President, in the policy, further directed us, NIDA, the Central Bank of Nigeria, the National Universities Commission, Securities and Exchange Commission, Nigerian Communications Commission, as well as other relevant regulatory bodies, to develop regulatory instruments for the deployment of the technology across various sectors of the economy. You may also be aware that there is the National Blockchain Implementation Steering Committee that was also unveiled, inaugurated by the Honorable Minister of Communications and Digital Economy on behalf of Mr. President at the launching and unveiling of the policy. And it is made up of 29 different organizations across sectors, both the public, private, academia, and other interested parties, including non-governmental organizations, because the drive is for everybody to be involved. And so that's the essence of the steering committee. So the increased adoption of digital technologies for banking transactions led to other issues of consumer privacy, security and protection. The rights and interests of consumers should also be protected and upheld. And as such, fair and ethical business practices, consumer education and awareness, and mechanisms for resolution of consumer complaints should be promoted. The National Information Technology Development Agency, through several initiatives, programs, and policies, seeks to protect consumers while using digital technologies. In our commitment to create an enabling environment for vendors and consumers to ensure that extant rules are applied on all government and information technology contracts, we had a series of engagements on consumer protection with a view to acquaint participants with the rudiments of awarding IT contracts in their respective organizations with the aim of developing digital technology in Nigeria, in line with NIDA's core values of professionalism, innovation, and people first. We also launched one of the key and highly exciting regulatory instrument that has become something that is exemplar in Africa, not only in Africa, but the world, the Code of Practice for Interactive Computer Service Platforms and Internet Intermediaries for citizen online engagement. We know, we are aware of the successes of that. And we are also partnering with the Federal Competition and Consumer Protection Commission to address data privacy abuse. You may also recall that the National Information Technology Development Agency issued the Nigeria Data Protection Regulation in 2019 to address concerns about privacy and protection of personal data. This regulation applies to all storage and processing of personal data conducted in respect of Nigeria's citizens and residents. It is indeed pleasing to know that this regulation resulted in the establishment of the Nigeria Data Protection Bureau, NDPB, which now also serves as an exemplar for other African countries. Excuse me. Now, as more banking services move online, the challenge of cybercrime becomes inevitable, especially in a society that is heavily dependent on interconnected digital technologies. Our colleagues there from NFIU, EFCC, I'm sure, you know, in the various sessions may say more about some of the initiatives that government is doing in that regard. So you may be aware that NIDA's mandate is to regulate and develop the information technology sector of Nigeria, an integral part of the economy, the digital economy, and central to this mandate is securing our cyberspace. However, we are not doing that alone. We are doing it collaboratively with all relevant stakeholders, locally and internationally. Policies also play a critical role in cybersecurity as they establish clear standards, guidelines, and expectations for individuals, organizations, and governments in protecting against cyber threats. A national cybersecurity policy considers guidelines for the development of cybersecurity standards and regulations, cyber threat intelligence assessment, incident response, cybersecurity awareness and training, public and private partnerships, and research and development to create a secure and resilient digital environment that supports economic growth, protects critical infrastructure, and ensures the privacy and security of sensitive information. You know this, but of course it's important to state that we have a national cybersecurity policy and strategy 2022 as the guiding policy for cybersecurity in Nigeria. This policy and strategy that is co-created by all relevant stakeholders serves as more or less the guiding document. So NIDA has been at the forefront of contributing to a robust and resilient Nigerian cyberspace. NIDA played a key role in the drafting of the Cybercrimes Prohibition Prevention etc. Act 2015. The Cybercrimes Act provides a unified and comprehensive legal, regulatory, and institutional framework for the prohibition, prevention, detection, prosecution, and punishment of cybercrimes in Nigeria. The Act also ensures the protection of critical national information infrastructure and promotes cybersecurity and the protection of systems and networks, electronic communications, data, and computer programs, intellectual property, and privacy rights. It is pleasing also to inform you that the National Information Technology Development Agency, NIDA, has initiated several policies and programs to ensure a cyberspace that is secure and dependable for businesses to thrive, thereby ensuring foreign direct investment. NIDA has a cybersecurity department that conducts periodic programs of awareness to enlighten Nigerians on the do's and don'ts in the cyberspace. In addition, NIDA has a computer emergency readiness and response center that is always ready to guide Nigerians on what to do when cyber breaches occur and who to report to. By the way, just as I indicated, NCC HASOC, the Office of the National Security Advisor, and other agencies of government have similar kind of centers, and we work collaboratively across both within and outside Nigeria. In particular, in our SAT, we carry out both preventive and proactive measures to secure our cyberspace, particularly for public sector organizations. We offer advisory services to public sector organizations on incident reporting, event management, and situational awareness. Our SAT has been upgraded to a world-class standard for cyber incident response and management in the country. Well, if you're following, I'm sure you may also be aware that the Office of the National Security Advisor in its center recently unveiled by Mr. President, has also a world-class center. So for us at NIDA, we invite everybody, if you happen to be in Abuja, you are welcome to visit our Computer Emergency Readiness and Response Center, to see that what the center is doing. In conclusion, NIDA applauds the initiative of Regtech Africa for organizing this conference. We are indeed very happy to be part of this year's edition, the second in the series. And we expect more of this kind of activity. And we believe with strategic partnership and collaboration, our combined efforts will improve our financial inclusion, consumer protection initiatives, and defeat cyber criminals in Nigeria. This will no doubt serve as a model for other African countries to adopt, in addition to, of course, working with everyone. Finally, I wish to congratulate us for witnessing this day and look forward to the fruitful discussions that will happen in the next few days. I thank you for your attention, and God bless the Federal Republic of Nigeria. Kashifu Inua Abdullahi, CCIE, DG CEO of the National Information Technology Development Agency, speaking through the voice of Dr. Usman Abdullahi. Thank you very much.
And it's a very digital, compliant voice. Thank you so very much, Dr. Usman Abdullahi. It's impressive.
You are most welcome.
It's impressive to know that the National Blockchain Technology and the policy is actually out there, and then implementation of the steering committee. We recognize how digital technology and the digital economic space in which we are in plays a key role. And one of the things I'm very passionate about has to do with consumers. Consumers protection is very key because these are the last mile. The transaction you witness will obviously be at the point of sales or the point where transactions actually conduct itself, so to speak. If we do not get it right in terms of policy, just like you've mentioned, and to see exactly how we can integrate technology in all of this, I guess then we perhaps might still be a very far way from where we want to be. So one more time, thanks you, sir, especially to NIDA, one of our partners, as well as we have the CBN. We say thank you, NCC, NDIC, EFCC, the Lagos State government, we recognize you. Main One Cable, pardon me, Main One is providing us free Wi-Fi. Have you connected to the free Wi-Fi? If you have, can I see your hands up? Don't be afraid. Don't worry, it's free. So why are you guys not taking advantage? It's paid for. Please make sure you take an advantage of it. The password is regtech_@m1. regtech_@m1. You can also download the Zoho Backstage for attendees. That way you can also engage through our different virtual sections. Our theme is elevating national policy on financial inclusion, consumer protection, and cyber security as we know. I want to quickly also mention the fact that the organizations that have made this what are why are here, and we're going to have a brief interlude to showcase them all. And then quickly, I want to recognize in person Mrs. Chizo Malize, one more time, CEO of FITC. Thank you very much. You're welcome, madam. Please put your hands together for her. She's here with us physically. And of course, I want to say a big thank you to my technical guys here, Sami Dove, Sharon Folon Rochelle, Israel. Thank you guys, the whole team. Let's give these guys wonderful experience. Please put your hands together for them. Gladly, NITDA was able to resolve the issues. It was not from our own end. And of course, every single one of you out there will make it all worthwhile. We want to say a big thank you. And all the multitudes of the thousands that are joining us online, say a big thank you also. Make sure you take advantage of the Soho platform and let's get this event going on. Take the hashtag, share as much as you can. The more you share, the more your brand, as also as a matter of fact, gets promoted. So let's get to share. He who shares prospers better. Our next session will be that brief interlude. If my very good friend Blessing is ready, let's have that short interlude of our sponsors for the next 5 minutes. And then the documentary can hold on because we need to go on to the next session, of which is going to be focused on ESG and regulatory reporting, as well as payment modernization and emerging technologies. They're going to run concurrently, and that is going to make it work. Are you guys ready, Sammy Dove? Can we have audio? All right. Has it finished? I wanted it to be longer, but I mean, you guys had that as a good concept. Sorry? Sorry? Do we have the documentary? Please play the documentary. I want my audience to be entertained. They need to see exactly what we're doing with, especially our online
The widespread uptake of digital services has heightened risk for consumers and raised new policy concerns for regulators. As digital technologies underpin more and more of our economy, society, and daily lives, there's a clear need to ensure that the rules that govern them keep pace so as to drive growth and unlock innovation.
POS terminal dispense errors seem to be a major problem in Nigeria. I personally do a lot of digital payment transactions across multiple channels, but POS channel is the most dominant channel that I engage with. Dispense error has been a major challenge for me as a user. Oftentimes, banks are not able to resolve my refund, and of course, this has affected the way I transact on the POS channel.
So I remember doing a transaction, a point of sale transaction at the supermarket, and I was debited that day. And it was almost, causing arguments because it showed me a decline. I was asking for the reasons for the decline. It wasn't obvious on the receipt because they couldn't print their receipts and all of that. But of course, the supermarket will insist on getting their own fund. Imagine if I didn't have another or an alternative, which is to use my other ATM from another bank. It would have just ended in a scuffle or probably just ended in something that's so unpleasant.
I've had a lot of crazy experiences using ATM cards, even via POS. Like, it's crazy. Sometimes I go to withdraw and then I get debited. Before the POS machine will even start processing, I've already been debited, and then the printout will come out declined. And of course the POS attendant will not give me the money because they've not received the alert. So I have to go to the bank. Imagine in this my condition. Have to go to the bank to make complaints and all of that before they will refund my money. It's crazy.
I remember one time I got debited. I was trying to withdraw some cash and I got debited. It was like a lot of cash. And the guy said something that, that is from the terminal or something like that. I had to go to my bank, but there was no receipt. And how I'm going to do this, I'm going to say I'm going to lodge a complaint. So he lodged the complaint, and I got the text message from the terminal or whatever service you uses, and they said that they will get back to me like 3 to 4 business working days. But that took like over a week, and what's going on? So I kept on going back to the guy, what's on? And the guy said, that you're going to do that. So long story short, they sent me an SMS like I think on the 8th day after the transaction happened, and I went back to the guy. The guy said, they've refunded.
All right, thank you, ladies and gentlemen. This is going to be continued affair. Sometimes I wonder why is it that when they show some of this image, people should try and go to Banana Island, Marina. We have high-rising buildings, not the yellow cabs all the time. They don't give these South Africans and Ghanaians the impression that we don't have digital buildings in Nigeria. So please, organizers, next documentary, please make sure you go to areas like look through that window, you'll see fine buildings. You don't even have this kind of buildings in South Africa, as the case might be. Leon, I don't mean it in the wrong way, just to let you know that is why we are first. All right? Thank you very much, ladies and gentlemen. We are going to be going to the next section. The next session is going to run concurrently. One is virtual, the other aspect is happening live here. The virtual edition is focused on ESG and regulatory reporting. That is very important. So if you're joining us online, you want to join that particular version, please kindly leverage on the Zoho platform. And then if you have any technical hitches, please kindly reach the technical teams. We'll find a way to have that resolved. We're having the fiscal one here, which is focused on payment modernization and emerging technologies. And I'm glad to know that Juliet Ongwe is going to be Dr. Juliet, Ongwe, the Senior Subtech Specialist, Cambridge Center for Alternative Finance. One of our supporters is going to be moderating this session. So, team, can we have her up so that we see that she's doing that here live? And I understand that some of my speakers also will be joining us virtually. But I want to quickly invite the Director of Program Management Office of EdSwitch, SC, in the person of Ambeneaza. Wonwozie is in the house. Please, can you put your hands together for him or her? Are you the one? My Ethiopian friend. Please come up. You're coming up here. This is where we have you right now. They are sitting in at the payment and modernization and emerging technologies. We're looking at how can new technology enable innovation that leads to better outcomes for consumers, banks, and regulators. The banks themselves obviously are service providers. Go this way. You climb the stairs. Don't worry. No, don't jump, please. We don't have insurance. Just go. So you won't say that in Ethiopia. No, we have insurance. NDIC is here, but I'm not sure we want to give you a bad experience. Whatever seat you choose, thank you very much. It's good to see you here. I'm glad. Well, we're going to also invite the head, Financial Inclusion, Security and Exchange Commission of Zambia, Mumbanga Kondolo Jr. is in the house. This your name, saying even makes my microphone feel digital. This is quite impressive. You're welcome from Zambia. I'm glad. We all look alike, don't we? I mean, that is quite amazing. I understand that the CEO of Emelde Group is also in the house here. Mark Bystransky is in the house here. Please, can you put your hands together for him? Mark, I was told you were on set, but I'm not too sure. Is it joining us virtually? Is he? If not, we'll need to be able to find that also clarified. And then we're having also the co-founder CEO of Zone, OB Emetorum. I don't know whether he's here in person or he's going to be joining us virtually. And my Oga at the top, who I was looking forward to meeting, is also going to be joining us virtually, the CEO of Precise Financial Systems and PFS, that is Dr. Yele Okeremi. Juliet is ready. Please, I would like to have Juliet on. However, the virtual section, which is the ESG and regulatory reporting, building a culture of change towards more responsible behavior with regards to investment and regulatory reporting, which is virtual, is going to be moderated by Mona Zwet, CEO of Regtech Revolution, one of our supporters. Thank you. So if you are joining that session, you want to go in right now. We have the panelists or speakers. Dr. Alfred Timkumlu is going to be obviously being on that panel, Executive Director of Band Scandal Markets Investors. We have Enobong Shitu, ESG and Regulatory Compliance Lead, DLA Piper Africa. Also, we have Noel Mahombera, the Program Manager, Regulation and Supervision of Financial Institution, Microeconomic and Financial Management Institute, as well as Eugene Tawian. He is the CEO of Second Stars Ghana. They will be having that moment. This is going to run concurrently, like I said earlier on, and we should be wrapping up the session within the next 45 minutes, more or less. Please, you just be mindful of me, and then I will call your attention. This panel section, obviously, we have its own presentation, and then we will have the question and answer session, which is going to run for some few minutes. So if you have need for questions and answer, all you need to do is to kindly please scribble it and call my attention. I'll get the ushers to help bring in, and then the speakers themselves are going to respond. But first and foremost, I have to be sure that Juliet is on waiting for us, as the case might be. Is she there? Juliet is moderating this section virtually. I know it's a tough one. The CEO of MLD Group is in the house as well. The CEO of MLD Group will be joining us virtually. And this is what we're trying to do with Regtech. We also want to help you feel the pulse of the digital aspect. Dr. Yele, it's good to see you. Can you hear me? Can you say hello? Dr. Okeremi, can you hear me? Juliet, Dr. Juliet, are you ready? All right, this is a part of some of the technical hitches that we may have. And I want to say a big thank you to MTN as well. MTN, thank you, providers of 5G. Dr. Juliet, are you ready? Okay, we can't hear you. We can't hear you. Because you have two physical panelists here seated. We need to make sure that they themselves are part of it. As soon as OB joins us in person or virtually, we'll hook him up. And the CEO of Email Actions, the physical one, yeah, he can hear me, yes, but we can't hear him. I know I went to Digital Technology Institute. How some of this thing works is the same challenge we had with Dr. Usman. Because the virtual section is going on concurrently right now. That is on ESG and regulatory reporting. Mwait is supposed to handle that. This particular one is supposed to be what we also have to hear. That is as part of the whole experience of the event. We're not supposed to hear them online. If not, we'll just have a total silence. So, Dr. Hele, you have to be able to adjust your audio. Okay, this feels like Moses receiving 10 commandments. Say something. Dr. Yele, say something. Dr. Yele, say something.
Yes, can you hear me now?
Better. We can hear you. Juliet, can we hear you?
Can you hear me?
Oh, fantastic. This is what we're talking about. Gentlemen, you want to hold on to your microphones. Say something to be sure that they can hear you. Say hi.
I think, yeah, it works. Testing 1, 2.
All right. So, Juliet, over to you for the next 45 minutes. I'll be counting the time. Thank you very much.
Okay, thank you very much. I was saying that for the first 10 minutes, I do have a presentation. And then after that, we could start the panel session. So I will share my screen. I hope you can see my screen from your end. I'll just put off my camera. 1 second. I hope you can see my screen.
Not yet. It's coming up, I think. Yes, we can see your screen.
Okay, excellent. So I'll just quickly take you through a few slides. I know we are behind on time, so I won't take too much of your time. My name is Juliet Ongwai. I really would have loved to be there up to around Monday. I was on my way there, but unfortunately, I had issues with my passport, and so I was not able to make it. But I hope online will still get the same value. So I'll just introduce myself. I'm Juliet. I work with Cambridge SupTech Lab. This is part of the Cambridge Center for Alternative Finance. And within the lab, we started mid last year. So within the lab, we have a mandate for about five mandates. One is around SupTech intelligence, so building intelligence around SupTech, so a lot of research on SupTech. Second is really why we're sitting inside the University of Cambridge, and that's capacity building. So we do have programs that are centered around SupTech and work a lot with financial authorities. Third and fourth are sort of work together. So third is application foundry, where we support financial authorities in their digital journey. So for this one, we have a specific focus on designing and developing SupTech applications, so working with them to design and develop applications. The technical assistance extends a little bit, where we now look at things like digital transformation assessment, readiness assessment, looking at tailored capacity building, looking at digital transformation strategy, for the financial authorities. And finally, just providing an ecosystem where we can all engage and chat about SupTech. So my presentation today is focused on the State of SupTech Report 2022, just to set the stage as we talk about Regtech and SupTech. It's good to think about some sort of baseline. So this was more a baseline report. Where are we at when we talk about SupTech? So with this report, we collected data from 134 financial authorities from 108 jurisdictions. We also sent out a questionnaire to 74 individual supervisors on specifics of now supervisory data. And then a further questionnaire to SupTech vendors, so about 6 vendors, just to hear their side of the story. And when we look at the responses, a few things stand out. We see that the state of SupTech differs across regions, different income levels, different agency types, because the survey was sent to different types of agencies, from central banks to capital market to insurance supervisors, so across. So what we see is in advanced economies, they have early adopter behavior, they have sufficient digital infrastructure, they have this emerging dedicated SupTech roles, while in sub-Saharan Africa, we're seeing SupTech is run by supervisors mainly. When we ask them about the outcomes of now these SupTech applications, most of them focus on internal, and their funding needs are more to grow the teams that support SupTech. While in sub-Saharan Africa, we see a lot of challenges, which I'll speak on. There's still issues on digital infrastructure. And when we asked them what their ask is, it was around training, technical assistance, and digital tools. And their funding needs are mainly to actually build that SupTech application. So when we look at SupTech adoption global, we see about 71% of financial authorities have already started engaging in SupTech. That can be either developing, having SupTech already in operation, or starting to think about a SupTech strategy or roadmap. While that is the case, we find that it's still in the nascent stage and a lot of room for growth. And so later on, you'll see some of the challenges speaking to why it's still at this experimental stage. When we look at who's leading the SupTech initiatives, we see that there's a combination of departments. So there are some that actually have maybe 2 or 3 departments working on the SupTech initiative, but mainly it is being led by supervision, and we see this globally. We also see this in sub-Saharan Africa, and then there's also IT or tech officers. We are starting to also see chief data officers or a data analytics department emerging to lead SupTech initiatives. When we look at the thematic areas for these SupTech initiatives, we see this is where we see some differences. So globally, it's focusing on consumer protection, prudential, and AML. But when we drill down to look at sub-Saharan Africa, we find that their SupTech initiatives are focusing more on machine executable regulations. So these are the issues with regulatory reporting. And then we also see focus on competition monitoring and financial inclusion monitoring. I guess financial inclusion is not a surprise, but yes, we start to see some differences between global and sub-Saharan Africa. When we ask them about the outcomes for their SUBTEC initiatives, we see similarities across global and sub-Saharan Africa, where SUBTEC is unlocking risk-based supervision. It's helping with improving data collection and increasing efficiencies in the use of resources. So mainly internal, some external is around efficient data flows between the financial authorities and their supervised entities. When we look at challenges, so it's not without challenges, they focus more on budget constraints, issues with data quality, issues with data skills, so not having the right skills, tech, data, and still issues with legacy IT systems. We asked what support they would require with SUBTEC, and they're seeking a lot of training. This is on tech, data science, and cybersecurity. They're seeking funding to support the building of SUBTEC and technical assistance for data analytics. Sub-Saharan Africa also had a lot of interest in terms of digital tools. When you look at the numbers, you start to see they also have a need for digital tools to support their SUBTEC initiatives. So despite the funding, the capacity needs, we're seeing they're starting to now invest in internal capacity. So while only about between 30 to 36%, have undertaken capacity building or other programs around SUBTEC, they did express the interest to undertake these programs. Now, finally, just a quick overview. As part of the report, we were able to update this 2019 SUBTEC generations taxonomy, just to extend in terms of supervisory areas and also align the tech and data that is required for supervision. So out of that, we were able to build what we are calling the 2.0, where it looks at where do these SUBTEC lie along this spectrum. So starting from 0G to 4G. And so when we look at the data, we see that currently, when they asked what tech and data is supporting SUBTEC, most of the solutions are still in 1G, 2G. This means they're using web portals and descriptive diagnostic analytics and APIs. And this is mainly because also even how they collect data then requires some manual intervention. But when asked what they would want, you start to see that chart or shift towards the right, where they would want a lot of 3G, 4G tech and data. So finally, we just asked around whether they are also investing in data. So do they have data strategy in place, and who's leading that? And you can see that there's a lot of work around having data strategy in place. And this is usually led by the chief data officer and still IT. So as I earlier mentioned, we're starting to see this emerging CDO offices that will support SUBTEC. So that's it from me. I think we can move to the panel session. So if that's okay, I will quickly move into the panel session. So with the panel.
Thank you very much. That was an insightful presentation. Just like we said, because of time, we still have a fourth member of
Sorry,
the panel.
we can't hear you.
Okay. who are the we? She can hear me. Okay. Obi is here. Please, can you come up? Please put your hands together for the CEO of Zone. He's joined us finally. Juliet, can you hear me still? All right. How are you, Obi? You're welcome. So, Juliet, you have your panelists already. 4 in person, live and direct. And then Dr. Okeremi is also there. I can see that he has some other person joining us in the background, as the case is. But it's all right. It's making sure that we have the technical experience. It reminds me of that CNN interview where the kids and the nanny had to run in. But it's all right. Dr. Yele, can you put a smile on your face? I need to see that smile. I was hoping I was going to get that in person. So Juliet, you have your panelists ready. You have their names, and then it's over to you. Then afterwards, we're going to come into the questions. We'll collect the questions, and then I'll either read them out. But please kindly check your DM or your direct message, and then ensure everybody's mic is up. All right. Thank you. Over to you, Juliet. Dr. Juliet.
Thank you very much. So in the interest of time, we will start, and I will give each panelist 1 minute to just introduce themselves. So we will start with Mubanga.
Thank you. Good morning once again. My name is Mubanga Kondolo, as earlier introduced. I am coming from Zambia, representing the Securities and Exchange Commission, where I basically run the financial inclusion portfolio, trying to coordinate the implementation of the National Strategy on Financial Inclusion, as well as other key commission projects such as the Sandbox, which may be of particular interest for this particular conference. Thank you.
I will hand over to Ebenezer.
Thank you, and good morning once again. My name is Ebenezer. I came from Ethiopia. My friend has introduced me earlier. I represent ETSwitch, the national switch of Ethiopia, which we are mandated to create interoperability between financial institutions and implementing and instituting the domestic payment schemes and providing also national payment gateway and serving as a central interconnectivity for clearing and settlements throughout the country. We also provide different kinds of shared platforms and infrastructures as a service. And thank you.
Thank you very much. We'll hand over to Mark.
Hi. Can you hear me? Okay. I'm Mark Pistriansky. I'm the founder and group CEO of MLD Group. We're a telecom through and through, e-commerce, CRM solution provider for, I think my father's company started in 1998 in the UK as a consultancy group. And we grew out to about 200 people worldwide. And we specialize in telecoms. So I'll be here to talk about what's new in telecoms, how blockchain adoption could be used within telecom industry, how the e-commerce, how transactions, orders, customer authentications. These are beautiful use cases that could be used within the blockchain. And that's what I'll be discussing. So thank you.
Hand over to Obi, please.
Thank you very much. My name is Obi. I'm co-founder, CEO of Zone. We are a decentralized and regulated network powered by blockchain that enables payments and looking forward to enable acceptance of regulated digital currencies on traditional channels. So basically what we do is we connect banks and fintechs together through this decentralized platform to allow fiat flow, fiat money or fiat payment flow across from multiple channels. Like I said, with a sort of roadmap to allow this extend towards the new forms of money that we see evolving, like CBDCs and other regulated digital currencies. So thank you very much.
Thank you, Obi. And over to you, Dr. Yele.
Well, very good morning, everyone. My name is Yele Ukiremi. I'm the CEO of Precise Financial Systems. Now, Precise Financial Systems is a software house, and we have offices in Lagos, Nigeria. We serve clients in about 41 countries, and all we do is build financial solutions. So today we work with about 130 banks across the globe and about 15 central banks in Africa. One of the things we've done, particularly in Nigeria, is help build a national switch for the automated clearing house in Nigeria. And we're quite doing a lot of other things, enabling banks, fintechs, and even non-banks to have reasonable financial systems to power their businesses.
Okay, thank you. So Yele, before you mute, maybe we'll start with you. So we're going to look at about 3 focus areas in this panel session, just looking at the impact of big tech platforms on payment systems in Africa, and then just how then we can reinvent, our payment platforms and leverage more on some of this emerging tech. So we'll talk a little bit about the blockchain, and finally look at now the reg. So how we can combine some of this technology and explore synergies. So starting with you, what would you say has been the impact of big tech platforms on our payment systems in Africa?
Well, from my point of view, and that may really be myopic, but I think Africa still has a whole lot to be desired. And this is for 2 reasons when we talk about big tech, because one of the things I realized about the big tech players are their influence. I was having a conversation very recently with somebody, and I said, the big tech actually, yes, they are not talking about it, but indeed, a whole number of them are stronger than governments of several nations today. Why do I say that? Because they control the data about pretty much all of us. They know more about each and every one of us than even some of us know about ourselves, talk less about our government knowing about us. Yet, they still play in a very safe zone. But if anybody knows so much about you, then one can predict that that person is likely to understand your spending patterns, that person is likely to know your appetite, and that person is likely to know what time frames you want to do certain things with your money. Believe you me, the big tech companies have this information. And in some other nations, they're already playing reasonably big. And you could see what happened when Facebook wanted to launch its own payment system. It wanted to launch a currency the other time. And you could see what happened to the sovereign in the United States, virtually ensuring that that didn't happen. But again, these things will continue to happen, the conflict between sovereigns and big tech. But like I always say, it is something like a moving train that has left the station, and it will certainly crush anything in its way. So I think the sovereigns are better begin to plan how to work hand in hand with the big techs. But coming to Africa, which is what you have said, I will say that perhaps the big tech haven't yet decided to focus so much on Africa, from what I see, to enhancing payments. Because if you take a look, for example, at places like China, and you see them making payments with platforms like WeChat, that's become virtually very prevalent. You will see what I mean when I say that I have not seen so much yet in Africa. But what are my expectations? My expectations are that within a time that's not too long from now, with or without the enabling regulations, the big techs will begin to play. However, every innovation or every innovation stands on a tripod. One, the technical, which the big techs already have. They have the switches, they have the interconnectivity to everyone. Two, the social, and that's why we call a number of these big tech social media. People accept them, they use them for communication day to day, they trust them. A lot of people virtually live their lives on this media. So the social part of it, people trust them, people use them. so much. And then the last is legislation or regulation. Usually, when things like this happen, we expect some regulation either from the central banks or from the governments themselves. Now, those are the things that we are still waiting for in Africa, to have enabling regulations to allow these big techs to happen. But my thoughts are that, take it or leave it, it's only a matter of time. The big techs are already here, and they will play, and they will play very hard in payments, generally across Africa.
Okay, thank you so much. So from that, I'm starting to hear possible competition coming in, issues on data privacy. You've talked about enabling environment, which I'll speak on later on. Mark, maybe I want to move to you, and you touched on something which is blockchain adoption. So when we're looking at these big players that are coming into our payment systems, how then can we leverage on some of these new techs to also then, play games and be able to compete and innovate and make sure they don't push us out of the market?
So a funny story is about the WeChat. We are an e-commerce telecom solution provider, so we have the platform and all the solutions around it for when you go online. And I got a call about a year and a half ago. I can say it now. It's from Orange, Morocco, and saying we've got this MTN Ioba, who's doing a great job in South Africa. We need to catch up. Do you have something like a super app? and I said, what, like a WeChat? So that was when the journey started, actually, about the WeChat super app in a telecom. And what we've actually built is using our e-commerce solution. We're providing a mobile service, which I'll actually demo tomorrow, but it's about being able to send and receive money, which you can do on the Ioba app as well if you're on the network of MTN. But you can also have a digital wallet now, and using blockchain, you can actually send and receive tokens between each other. You can send and receive specialized tokens from telcos that they've launched. So it's not just about cryptocurrencies not being regulated. There's ways now telecoms can actually tokenize, digitalize their sort of loyalty rewards programs and so on. So these are kind of interesting aspects or areas we're looking at. And we're seeing that the telcos are becoming from the techo. They want to become the techo, right? So not the telecoms, but I think I screwed up my joke there. But anyway, they want to become more of a technology company. That's what I wanted to say, instead of we're finding that there's a lot of possibilities for blockchain for, as I mentioned, customer authentication. In Central Europe these days, you want to go to O2, T-Mobile. These are all our customers, and you want to sign up for a new contract. Well, you need to go to the actual brick and mortar store, show your ID. They fill in your your name, whatever you want to order, and then 5 days later you realize that they spelled your name wrong, right? So you have to go through. So imagine doing that through a smart contract. It's instantaneous customer authentication. There's, as gentlemen also mentioned, there's a reduction of fraud. You can share, fraud lists between telecom operators that could be in a blockchain that can be instantaneously updated. So there's numerous ways of actually adopting blockchain within telco industry, and we're at the very, very start of it. I look at it also as a CRM in a cloud, right? So when Salesforce started, 20 years ago, even 15 years ago, we went to some of the telcos with my father, and I said, well, what do you think of putting your customer data in a cloud? And they said, our precious customer data in the cloud? No way, That's crazy. Now, if you go to any telco, well, of course we're in a cloud. We're not legacy, So this is about there's aspects of going into the private blockchain and the public. So there's areas, and I believe that these even these tokens, they can be regulated, and we can really use that to our advantage within the telecom industry. So I'm very excited, and hopefully everybody will join us at the presentation of the EMG Super App tomorrow. Thank you.
Thank you, Mark. And I think you've touched on some of the things I was going to or rather my next question, which is to Obi around maybe the challenges that we face. So even as you're working with blockchain in Africa, what are some of the challenges you're facing? You saw in my presentation some challenges maybe around infrastructure. So what are some of the challenges you're facing as you innovate in this space?
Yeah, thank you very
Thank you
much.
very much.
I think the initial challenge would be the obvious one, which was tied to the regulatory disposition. And that's because we all know the way crypto is, crypto is not compliant with regulation, has lots of loopholes and all that. And because blockchain is the technology that powers crypto, one would expect that the regulators would be very skeptical about anything to do with that. So this is a key aspect of challenge that we experienced. Obviously, the solution to that was obviously walking the regulators through the journey and having them understand clearly the difference between a technology that has huge potential and one application of the technology that might not be compliant. So that's been one, and I expect that thin line needs to be drawn very clearly as, across the continent into other regulators beyond even Nigeria. So that's one huge barrier. The other one would be the technical expertise to build innovative applications and innovative solutions. Now, this is a general issue because there's a gross debt of technical expertise. Huge talent pool, so the talent is there, but not sort of developed in that sense. So there's a lot to be done in terms of grooming the talent and sort of developing the talent and building that ecosystem to support. There's other sort of paradigm shift type challenges with how we think blockchain would impact financial services as a whole. The paradigm shift from more centralized financial services to decentralized financial services, and I mean like mainstream DeFi. That thinking is very different, and there's a lot of sort of things that have to be put in place in terms of even the way that kind of ecosystem can be regulated, the new regulatory angles to adopt. So that's something else. I think finally as well, generally, blockchain sits at the back, right? It's like a data store that is immutable and transparent and so on. But the real thing that gets adoption is how the users interface with any technology, right? So I think there's a lot of work to be done for any types of blockchain or distributed applications on the front end. The user experience, how do you make some of these new forms of financial services very familiar, to end users with what they are used to, in a sense, abstracting that back end that can be complex, and replacing it with interfaces that feel like the regular interfaces that end users are used to. So I think there's a lot of work while still maintaining the security and all of the protocols that blockchain dictates. So yes, I think these are some of the areas, and I know a lot of work is ongoing. At least we for sure are doing a lot of work in some of these areas, trying to really push the boundaries across some of the different domains.
But I'll move over to Ebenezer and just ask around partnerships. So I know one of the models, that we are seeing is these partnerships between regulated entities, banks, telecoms, with either big tech or the fintech. So could you speak on some of these partnerships, so possibly with EdSwitch?
Thank you. I'd like to start about mentioning about how Etiswitch is established back in 2011. Our main existence is due to collaboration and partnership between financial institutions. In the first place, all the financial institutions come together in 2011 and formed Etiswitch so that it can reduce costs for themselves and not to repeat infrastructure investments now and then, assuming that the foreign currency unavailability in the country and other aspects into mind. So we established because of collaboration and partnership is created. And we can mention a lot of impacts around, notable impacts actually in Africa. We can mention the rise of mobile money services, which has become increasingly popular in countries such as Kenya, Tanzania, and Uganda. And also we can mention particular example to this is M-Pesa, allowing users to transfer money, pay bills, and make purchases in different countries. M-Pesa is also coming to add this, and they are actually discussing with Etiswitch to integrate and to form that partnerships, and so that they can become one of the participants in the interoperability environment. So Big Tech platforms also has facilitated international cross-border payments and remittances, which has been a major challenge for many Africans in the past. We can mention services like PayPal and TransferWise, and which have made it easier and cheaper to send money across borders, which have had a positive impact on the trade and economic growth in the region. So coming to a few examples how these partnerships benefit, we can mention mobile money partnerships where Vodafone also partnered with PayPal to launch M-Pesa in Ghana. The partnerships around payment processings where JP Morgan partnered with Amazon to process payments. We can also mention different kinds of robo-advisory partnerships where Future Advisor and BBVA partnered to provide advisory services for customers. So we can also mention open banking partnerships where banks and financial institutions partnered with big tech firms to take advantage of the open banking initiatives. We can see the case with HSBC partnering with fintech firm named Bud to offer its customers with a range of third-party products and services. And coming to blockchain, we can mention financial institutions partnering with big tech firms to explore the potential of this blockchain technology in the financial services. For instance, the Santander partnered with Ripple to launch the blockchain-powered international payment services, one example. Through this partnership, the bank has integrated Ripple's blockchain technology into its payment infrastructure to facilitate international transfers. So this has allowed customers in certain countries to send and receive payments and transfers across the world. I think I have covered some of the points.
Thank you. I can move over to Mubanga. So we've been hearing a lot of feedback around having an enabling regulatory environment. And you earlier mentioned the sandbox. So are you able to just speak a little bit about the sandbox, your experience as regulators, and how then that's helping you sort of understand this innovation and your journey towards providing this enabling environment?
Can you hear me? Okay, now I think that's clear. Thank you, Juliet, for that question. Maybe before I start giving our experience in the sandbox, I just want to probably speak to something that resonates with the rest of Africa when it comes to regulations. While we appreciate that regulators across the continent have fairly put in place some regulatory mechanisms to enable big tech firms to thrive in a way that doesn't put consumers to their detriment, but as well as supports local participation in that space, there's still key questions that we keep asking ourselves, and those are obviously around the areas of competition, for instance, and market dominance. There's questions around financial stability, also looking at issues to do with consumer protection, particularly with regards to data privacy and security around those issues. How do we mitigate the risks that arise with that vast allocation of data to the big techs? And obviously issues also to do around capacity building and generally cross-collaboration among regulators. So I think with the sandbox, we have tried to adopt an approach where we promote the principles-based approach, which tries to address those various facets. With regards to competition and market dominance, for instance, we work closely together with the Competition Authority just to see to it that there is no abuse in the market with some of the big techs that are providing some services to the local players. When we look at financial consumer protection, I think we try to collaborate with the innovators in a way that we allow them to write their test plans. I think the earlier presenter mentioned that I think our goal as regulators is really financial stability, reduction of systemic risk, and ultimately protecting the consumer, or in our case, protecting the investor. So I think, in essence, we try as much to have that open discussion with the innovators and write the test plan, which will ideally be used to sort of see the levels of adherence on some of the parameters that we have set. And then in terms of financial consumer protection with data privacy and security, it's, I think, incumbent on us to really look at some of the risk management mechanisms that have been put in place to mitigate any violations of security on the part of the consumer, just to see that some of those laws that speak to cyber crimes, cyber security are adhered to also. In Zambia, we do have, I think, good laws on cyber security and cyber laws. We recently had acts that were put in place. Also, they are also supported by Payment Systems Act, as well as the Electronic Transactions Act. So we also allow that some of those laws are adhered to, just to see that the regulation, I think, is made robust on some of those fronts. Thank you.
OB, and I just wanted to touch on some of the concerns are around maybe trust. So how do you work around building trust in some of these systems beyond blockchain, looking at things like artificial intelligence and this lack of explainability, or the black box? So how do you, or how can we work towards building trust in this unknown? Because these are some of the concerns that regulators have.
So I think generally, when it comes to trust, and whether it's with AI or with blockchain or with any new, any potentially technology has potential ramifications, the involvement of the regulators and kind of endorsement is one big way. So I think the general population, and when I say regulators, it could be for financial services, it could be for data, for example, could be for the telcos. But I think the end consumers sort of rely on the authority of these regulators and the expectation that there's that protection or the protective activities have happened to be able to improve their level of trust. Crypto is a good example. A lot of the population has not adopted crypto type financial services for this same reason. There's no recourse if anything goes wrong. There's no endorsement, there's no certification, none of all that. And that kind of leaves end users wanting, as compared to when you think about banking, for example, the traditional banking, where you have banks who are listed by the regulators as authorized to operate, and mechanisms in place to ensure that end users get recourse where there are issues. So I think cutting across different types of regulators for these new and potentially really potent technologies, and there's conversation around regulation even for generative AI, the new powerful generative AI. We are pushing regulation for blockchain and crypto. In fact, we're adopting what we call a regulated blockchain approach, meaning compliant and with full oversight. So that's, for me, I think being able to put regulators behind some of these new potent technologies, but in a way that does not sort of stifle the innovation, plays the role of protecting customers and mitigating systemic risk, while facilitating innovation, would be something, would be huge and, in fact, inevitable. The challenge for the regulators, obviously, is being able to adapt quickly, be agile, learn quickly, being able to iterate, and adjust. Because sometimes you lean towards over-regulation, sometimes you lean towards under-regulation, but it's more about the agility to adjust as these things evolve,
I can just add to that. If you, for example, the Ubers of the world, right, or the Airbnbs. I mean, it was this very successful. Some of it was technology, and it was the regulators needed time to adapt. Is it a taxi? Is it a hotel? But in the end, I think the consumers benefit. For example, in telecoms, now in Nigeria, there's a regulation for MVNOs, mobile virtual network operators, to be able to be licensed, which brings massive consumer benefits, right? Because it forces the big boys or girls, they forces them to actually look after their customers, to put down prices in order to be competitive. And this kind of competition is fabulous for, and I believe the blockchain and also the payments, the digital payments, all that will also bring some way of forcing, let's say, the big banks and them to be a little bit more, bringing people in, and the competition in essence will benefit, I think, the end users, and that's what we're here for. We also, we believe in regulation, but also regulation can benefit all. That's what I wanted to say. So yeah, I just wanted to add to that. Yeah. Thanks.
Thank you. Mark, hold on to the microphone, because I have a question for you and Dr. Yele, same question. How then can regulators also then take advantage of some of this tech, be it blockchain, AI? How can they leverage on that to improve their processes and to also meet you in the middle?
I guess, yeah. Okay. From the regulation point of view, I think being on top of things, seeing what actually the technology that's being used within the telecoms, working closely with the telecom operators in order to have, nowadays there's this fraud list. So there's each telecom has a list of entities or companies or what have you that have done some fraudulent things in the past. So imagine if you had one list that could be automatically updated, could be changed, and it could be shared throughout all the telcos in the world. And this is a beautiful thing for regulators It's a beautiful thing for telecom operators. It reduces fraud, and in the end, consumers are happy, and people. So these are kind of things that I think would benefit. You want to jump in and help me a bit here?
Yes, I wanted coming from you spoke from telco, but from the financial services angle, there's some sort of innovative thinking around how blockchain itself becomes a tool for regulating financial services to sort of automate, streamline, and improve the effectiveness of regulation. And how? Very simple. The transparency and immutability of not just information, but even processes that run on the blockchain becomes a very huge utility for regulators. And what do I mean? In blockchain parlance, we have what we call on-chain governance, which is a way to control what happens on the blockchain. In typical blockchains, it's done pretty much the way a company governance functions, through voting and so on. But if you introduce a regulator into governance where the regulator is a filter for what goes in. And when I say what goes in, I mean like products. We have today a typical practice in blockchain where there are code audits for smart contracts. So the code audit is to determine that the smart contract does what it is as proposed to do and that there are no like loopholes or stuff in it, right? So if you combine code audits, which can be automated today with generative AI, we see that ChatGPT and the rest of them can audit code, right? So if you combine audits, code audits to audit digital financial products, which come in the form of smart contracts as they go into the blockchain, and realize the fact that once they're there, they can't change. Like even the developers can't edit them.
And those will be regulated by the regulators.
Absolutely. So the regulator is the screening, filter, products go in, they meet the criteria to be able to be deployed. Once they are deployed, there's full transparency about how they are operating, and you are sure that end users get what they were sold in a way that is completely consistent, immutable, and can't change until another sort of screening process happens. So we kind of envision a world where these regulated blockchains support a very robust developer ecosystem, right? Very agile, innovative, robust developer ecosystem, building decentralized applications and decentralized financial products, but overseen in a very simple and efficient and automated way through this kind of on-chain governance by regulators sort of sitting on top. So this is something that we think will be quite powerful in the next paradigm for financial services.
Thank you. Dr. Yele, do you have any, you can chip in before I take some questions from the audience?
Yeah, well, I mean, when we look at the possibilities of new technologies for regulators and for regulations, I want to say that first of all, it's important to understand the essence of regulation. The essence of regulation at the end of the day is trust. Because regulation that doesn't breed trust is useless. So the only reasons why regulators, I mean, if you are playing a football match, that's what a referee does to ensure that there are certain codes that are followed and adhered to ensure the sanctity of the game. So essentially, anything a regulator does, they must understand that their job is ensuring sanctity. And so I hear things that are going on, for example, on the blockchain, which I like, and I personally do believe that blockchains are excellent solutions for conventions and clubs where all the players agree to the rules and say that the rules that govern the activities about our association are coded on the blockchain. So what that suggests is that the blockchain becomes self-regulatory in its own self. It becomes some form of intelligent system that guarantees that all players get what is expected of them if they put in any inputs. I'm talking about things like artificial intelligence. You'll be amazed at what machines can do One of the things that I've come to accept, and everybody will actually accept at the end of the day, is that humans are humans, machines are machines, and humans cannot compete with machines, just as machines will not be able to compete with humans in our own exclusive preserves. One of the things we understand is that machines, by virtue of the fact that they have access to so much data that they don't forget, the human memory is short. Machines don't forget most of these things, and they are able to use conceptual models to determine and predict what is likely to happen. They are actually going to be better at predicting certain activities. And that's one of the things that regulators can do. Taking a look at trends, they can proactively know that certain things are likely to happen when certain things already happen. And so, in putting those regulations on the table, they ensure that even before challenges come up, they put rules or regulations in place to ensure that the society is protected. But if we think that the world is going to continue the way it used to be, I think it's a joke. The world has moved on. Artificial intelligence is on the table. Blockchain, yes, though nascent, I think blockchain will still need to emerge and find its own unique spot where it's able to say clearly, and I have some ideas, where we're able to say that this technology is completely in the exclusive preserve of blockchain. But whether blockchain works or not, whether it is desirable or not, I think it is desirable. I think it can be used severally for many cases. And I look forward to the world embracing these things.
Okay, thank you very much. I see we're running out of time, but do we have time to take a question from the audience?
All right. Yeah, we do. We certainly do. That's part of the reasons why we're here. And I think my technical guys are going to help with that. And earlier on, I said we perhaps will write it on a piece of paper, but I think we still have some time, just about 10, 15 minutes, thereabout. Please, can I have the questions from the online participants, if there are any? But, I mean, with your kind permission, Dr. Juliet, let me just throw the question access open to our wonderful delegate. The hall is quite full. This is impressive. And everybody's paying apt attention. Any questions? One or two or three? Yeah, I see from Dr. Can I have, Usher, please, can you come up? Photographer, you have a question? Okay. Why? Yeah, you could have a question. Why people giggling? Well, where's the microphone? All right, let's have Madam ask the question she has. I'm always excited when I hear some of this. So we're going to take all of the questions all together. Dr. Malize has a question.
Thank you very much. No, why? It's fine. Thank you very much for a very wonderful plenary. And Dr. Juliet, excellent coordination. Thank you for bringing the best in this super great panelists. My question is to Ebenezer, and I'm excited to hear about the great things that you do around partnerships and collaborations, especially with regards to the platforms as well as the regulators. At this stage where we know that from all of the things we've heard over the last 30 minutes on this plenary, the innovations and operators are far ahead of regulators, both in terms of innovative product designs, platform designs, and all of that. Where do you see ease of partnership and collaboration that brings regulators to the side of operators so that there is good understanding, good collaboration, and far more importantly, continuous industry development? Thank you.
All right, we have one question from the CEO of FITC. We have another. I think she's one of us. I'm not too sure now. Please, if you're my speaker, I will need to know when you are in the hall so that we give you due recognition. Thank you.
Yeah, actually, I'm really glad you brought that question up because it was related to what I wanted to ask, which is, to what extent do you see the importance of cross-jurisdiction regulatory support and collaboration? And, do you see any good things happening in this space? it's definitely a case of a race against time. So I'm particularly keen in understanding the panel's views on that. Thank you.
All right, thanks. And then we have two. I think we'll just respond. Okay, we have a third one there. Do we have one more after my very good friend, gentleman? Is it with EFCC? Do we have another question or comment so that we perhaps will just give it this time and just have it wrapped up? Regulation is about trust, no doubt about it. What's the name and organization, please?
Okay, my name is Mr. Ogochwobi. I'm a tech lawyer. I work with the law firm of Pagestone and Grace.
Any relationship with Mr. Obi here?
No. So I thank the members of the first panel for their insightful discussion on the issue. But my question will go to Mr. Obi. I heard what every one of you discussed, but there was a very important missing issue which I want to bring to the attention of Mr. Obi. And that issue is with respect to the issue of consumer protection. You agree with me, in the last 6 months, we have recorded a high rate of online transactions due to the cashless policy of the Central Bank of Nigeria. It is a very commendable initiative, but at the same time, it poses a lot of challenges for consumer protection. And what do I mean? There was an industry report that shown that at the end of March 2023, there was about 4 trillion naira failed transaction that had not been resolved. And this issue of failed transaction brings issue of trust in the system. In fact, 2 days ago, I did a transfer from my bank to my another account. In fact, I thought that the transaction was successful because I downloaded the payment transaction receipt, which showed successful. But after 3 days, I went to check my balance in that beneficiary account. I discovered that there was no inflow into that account. So I begin to ask myself, I'm pretty much literate. I was able to detect it. What of someone in the rural area that might not be opportuned? So what it means, the money is lost because it might not be able to, figure out what happened. So I commend your company for using blockchain in terms of providing payment services. So I wanted to know, how can you be able to, advise regulators to be able to find a very proactive mechanism for resolving failed digital transaction, knowing fully well the fast-paced nature of digital transaction? That is one question. Then the second question, which is my final question, is this. In terms of settlement of card transactions for merchants, what we have today is maybe a day after the transaction date for the settlement. I see the merchant to be on the receiving side, try to wait for 2 days for the reconciliation and all that, and sometimes there may be chargebacks. So I'm asking, can we have real-time settlement as it is today, using some of the beautiful technologies you guys have mentioned to enable merchants? Because sometimes some merchants are hesitant to start using POS for their transaction because they will ask you, I don't want to wait for 2-3 days for me to get value for my money. So how can we be able to achieve that? Thank you.
All right, we have virtually 2 or 3 questions, one comment, plus or minus. And I'm very passionate about this because it's, as a matter of fact, the end user or the last mile junction that we'll deal with here. So Dr. Juliet, perhaps as a way of each of the panelists responding and also summarizing this panel so that we can be ready to go in for the internet or break and then start up the next session. Over to you, madam.
Yeah, thank you. Thank you very much. I think great questions. We'll start with Ebenezer. You can take the question on partnerships.
Test. It's a good question, thank you. I'd like to start from the synergies between machine learning, blockchain, and AI, IoT, and big data, which they both all present opportunities and challenges for regulators. On one hand, these technologies have the potential to transform industries and improve efficiency, transparency, and security. On the other hand, they also raise significant concerns related to data privacy, security, and ethical considerations. So for regulators, one of the most significant implications of these technologies is the need to develop new regulatory frameworks that address the emerging risks and challenges. And this requires a very good and deep understandings of how these technologies work and how they interact with each other, as well as an ability to adapt quickly to new developments and innovations. One area for regulators may need to focus is on data privacy and security, because the massive amounts of data generated by IoT devices and analyzed using machine learning algorithms can be sometimes highly sensitive, and the risk that this data could be misused and stolen is high, and regulators may or must develop new rules and guidelines to ensure that the data collected and used in responsible and ethical manners. So it's true that innovation operators, including big tech companies, often move faster than regulators. This can create challenges for regulators who are tasked with ensuring that these technologies are used in a safe and ethical manner. However, it's always important to note that innovation and regulation are not mutually exclusive. In fact, they can work together to promote continued industry developments always. So partnership and collaboration between industry and regulators can be or can help being a bridge the gap between innovation and regulation. For example, industry can provide regulators with insights into the latest technology developments or advancements, while regulators can provide guidance on how to develop ethical and responsible framework for these technologies altogether. So this can lead to development of regulations that are informed by industry expertise and that promote innovation while protecting customers and users at all times. So another area of collaboration and partnership can be beneficial is in the development of industry standards, where standards can provide common framework for the development and deployment of new technologies. So in overall, a partnership and collaboration between industry and regulators are crucial for promoting continued industry developments. Thank you.
Thank you very much. That was a great response. We also had a really good question on cross-jurisdiction regulation and support. If we could have one of you, I believe it was to the panel. Anyone want to take that question?
Repeat it. Try. Yeah. Cross-jurisdictional.
We'll take the question. Cross-border, what did you call that? Cross-border collaboration in terms of regulation? Cross-jurisdiction, pardon me. I think that was more of a lawyer's comment or statement. All right. Maybe Dr. Yele has something to say or something. I see.
I'll take a stab at it. You know, when I had my introductory statement and I spoke about big tech players being a lot more powerful than even governments of nations, these are some of the issues that I had in mind. because these tech players operate across jurisdictions. And there's a particular case in point between Microsoft and the United States government. And they had, Microsoft, the United States government had more or less come to Microsoft and told Microsoft to present some data about a particular person to them using the power of the state. And Microsoft said no to the United States government. And this thing went to litigation. And the point that Microsoft used at the end of the day to win was to say the data was not on American soil. And so the United States government was shackled. So essentially, that's why we said, when we look at the way the world is going today, the concept of sovereignty and the concept of jurisprudence is actually being challenged. And we need to take a different look at some of these issues. For example, what are the laws that govern transactions that happen in the cyberspace? Naturally, if you go by jurisprudence, if a crime happens in Abuja, then only a court in Abuja is competent to try that. Even if you took that same matter to Lagos, the court in Lagos will tell you that they do not have the competence to try that matter. But in the cyberspace, it's a different ballgame. And these are things that I believe that lawyers generally are working on. And these are the kind of things that happen even in the United Nations. So the United Nations, which is supranational, is a means of nations ceding reasonable part of their sovereignty to the global or better good of all, so to speak. So I want to say that the rules that will govern transactions that happen in the cyberspace are going to be taken in a very different manner from the way we look at them. And the question is, who will be the cyber police? Because when we talk about law enforcement, we have to talk about the police. So these are questions that are still being thrown up in the air. I am not certain that people really do have answers to them, but they are very big concerns. Now, let me also talk about a question that was asked about merchants, settlement for card transactions, T+1, which makes it a little bit unattractive to merchants to use POS. And I'm very aware of that. Now, I think some of the reasons why these things have happened is because we are now using what is available today, and we are now comparing to what they were doing. You remember before Nigeria, particularly Nigeria, really did a lot of good work with instant payments. And by the time Nigerian banks were doing instant payments, it wasn't pervasive in Europe, it wasn't pervasive in America. As a matter of fact, people were surprised in Europe when people were doing transactions in their banks over weekends and monies were flowing in real time into other people's accounts. If you just cast your mind about 10 years before now, these were things that were not on the table. So people, if you wanted to do a transfer, you would have to wait for 3 days before the money would hit the account of the other party. And we were all happy with that at that particular point in time. What has happened now is because instant payments have become pervasive and people are becoming a little bit dissatisfied with anything that delays the payment into their accounts. And if you take a look at what has happened, particularly with conventions, so we talk about gross settlements and we talk about net settlements. And if you look at what has happened in the past, because for real big transactions, which was defined by the banks, saying that a threshold of a certain amount, they wanted the money to hit the other bank in real time. So they did real-time gross settlement systems. But for retail transactions, because they felt that these transactions were little transactions, they preferred to do net settlements. And settlement used to take place usually at the end of every day. And it's at the end of every day that each bank gets what is due to it. But if you take a look at what's happening with instant payments, what actually happens is that when you transfer your money from an account in First Bank to another account in Union Bank, the Union Bank actually pays the customer out of their own pocket. They don't receive the money yet. They pay that customer out of their pocket. Settlement takes place at the end of the day when the banks decide how much is due to them. So I think that these were things that had happened in the past, and I actually do believe that it's only a matter of time. The technology is already available because all transactions that happen on POSs across switches are visible to all the players, to the banks. They already know which monies are due to who. So actually, there's absolutely no reason other than laws and regulations and conventions, like we are talking about, that stop them from allowing such money to hit the customer account in real time. And therefore, I think it's only a matter of time when people begin to push more for this. The technology is already there. The people want it. Remember, I said it stands on the tripod: the technology, the social acceptability, and then the last is regulation. Once the central banks decide that, oh yes, the monies that go across POS transactions should be able to hit the customer accounts on a retail basis, it's going to be a matter of might be months before it happens. But I think it is desirable, and I think it's 100% workable as we speak today. Thank you.
Okay.
About the regulation and innovation. So I run a software company. We innovate, right? What if the regulators started to innovate? What if the regulators start to work with us at the same time, synchronized, and we can actually innovate together? So I find, maybe this is just on a side note, but I've been listening to a lot. I'm not a regulator, obviously. I'm a entrepreneur, but what I see is that it's always been catching up, right? So Uber has something, as I mentioned, Airbnb and so on and so on. The blockchain has something. What if the regulators actually started to innovate and started to make ways, inroads in order to not be catching up in making regulations at 2-3 years after, but while simultaneously while the actual technology is building, forming. That's what my 2 cents.
All right, Dr. Juliet, I think we've run out of time. So if there's any more comment, we'll take that briefly, and then we'll wrap up this session. Okay?
Yeah, I just want to add on the instant payment related questions with Dr. For enabling merchants to receive or finalize settlement within a day. Even Dr. Yele has also mentioned it. But just to brief you, one of the initiatives that I'm currently leading at ETIS, which is the deployment of the real-time platform to enable same-day settlements and instant availability of funds for both customers, financial institutions, and for the merchants as well. But in Africa, there are few instant payment platforms are currently running. From all of the 13 instant payment switch, only 5 of them are moving toward this maturity of inclusivity level. That means we can mention the systems in Ghana, the NAT switch in Malawi, the TCIB in SADC, and the ZICL in Zambia. So only these instant payment platforms have reached the full range of payment use cases and the provision of for transparent and efficient consumer resource mechanisms. So we can say that we're still working on it to enable merchants to receive settlements and overall. But the key part for enabling that is deployment of the instant payment platforms.
All right, Dr. Juliet, it looks like the conversation is becoming hotter. Before Obi responds, also I think my very good friend Charles or Robinson has a comment or a question quickly. Microphone. Go ahead.
Oh, okay, yeah. So this is for Obi. So how has Zone been able to integrate this digital payment method, the fiat, with regulation, given the fact that the regulator, CBN, has pegged most financial institutions from cryptocurrency transactions?
All right, Dr. Juliet, that's a question for Obi. If you can respond to it, then we can just wrap up with the photograph. Over to you, Obi.
Okay, all right, thanks. Let me just quickly touch on the first question that was directed to me, and it's tied to the disputes, consumer protection tied to disputes. When transactions fail and customers don't get their value, and the value is stuck. And like you said, it's a big issue, especially for the informal sector and the low-income earners. But it's linked to settlement as well. And the real issue is that it's reconciliation, right? One side of the transaction says one thing, successful, the other side says failed. And it takes days or weeks to harmonize that position. That's the real issue, and it's done manually, right? And that's what makes it look like the money is stuck, hanging, and that's what creates the trust and confidence issues amongst those, especially those categories of customers. The solution, and that's what affects settlement actually. There are two issues that affect real-time settlement. One is that the banks don't get their money in real time. So it's a huge exposure to settle when you've not gotten your money. The second issue is that even if you could, if there's a chargeback, if that kind of issue occurs, you've settled the merchant for money that they didn't, for a transaction that failed, right? Then you have to struggle to get it back, right? So the solution is related to something we are pushing on the blockchain, which is leveraging the transparency that blockchain provides, where every party has real-time access to the status of transactions. So it takes away reconciliation. There's no reconciliation. And we build smart contracts that can use that transparency to automate, so detect that this has happened, and then resolve it immediately by refunding parties, so that those customers don't need to wait or go complain to their banks and all of those types of stuff that create that trust, those trust issues. If the transaction fails, fine, it can fail for any reason, but my money shouldn't be stuck hanging somewhere, right? So we're rolling that out across POSs and ATMs and so on right now on Zone. We hope that within a year or so, that problem should end, at least for Nigeria. So that's on that one. On the issue of the question around fiat payments on blockchain and crypto and all that, I addressed it briefly. What we did, and there was this huge challenge when we started, where some of the big banks were like, look, this is fantastic, but they asked this question, how do we know we're not sort of transgressing some issues around CBN, especially because CBN was clamping down on companies that were running crypto services. So what we did was we went for what is called a letter of no objection, meaning get the CBN to write to say, look, we're fine with this, right? It took a while. It took maybe a year, lots of engagement in Abuja and so on. In fact, that letter would typically, the level that would sign that letter had to take it one step higher to the top to sign because of the controversy around crypto and so on. But the point is that engagement provided clarity around the power of blockchain to enhance the existing ecosystem as opposed to the new digital asset class that is not fully compliant. And instead, what we saw was super excitement by the central bank. So at the time when the central bank was clamping down on a lot of crypto startups, they were super excited about what we're doing. And everybody was surprised, like, how the hell did you guys get CBN to give you no objection? And then following that, we got our license as well. But that demonstrates that regulators are really focused on improving, like providing significant improvements to the system, especially where the risk is mitigated, as opposed to shaking up, overhauling the system in certain ways. So I think it was a benefit. We enjoy that benefit of that disposition regarding how can we as a regulator improve the system. And then following that, as you all know, eNaira was launched based on blockchain as well. So that's how we've been able to.
Okay, thanks, Obi. If I leave you, we are just going to go into further details and depth. This is amazing, Dr. Juliet. I really don't want this section to end because I think a lot of the insights we're sharing out here are things that are very, very important for us to actually not just take home, but to also, have some of these insights help us drive. And congratulations to you guys as Zone. But you guys escaped the the big net. You did something right, obviously. Is it Mubanga now that you have something to say briefly? 30 seconds, and then we'll wrap up.
Thank you very much. I think what's been highlighted is quite evident, what's happening. But I think entirely, as regulators, we do realize that big tech is obviously transformative also for the regulation side. But the challenges also continue to exist. There is challenges to do with adaptation. But how do we, as regulators, respond to addressing that challenge? I think that's where issues of capacity building come in very strongly. I'm glad to have been a part and parcel of the Cambridge Center for Alternative Finance as being trained to understand some of the regulatory innovation. And also, I think it's important that regulators continue to invest more in resources and also infrastructure that is required to understand the ever-dynamic needs of the big tech industry. Thank you.
All right, thank you. I'm glad that the CBN is obviously giving their support one way or the other to the Tech African Conference. If they're not in physically, they are obviously joined virtually. A lot of these comments and contributions are actually in the post conference report. All of this has to be captured, and I think there are several highlights that each of the speakers has actually brought up. One of the things I want to take up, which is what Dr. Yele will say, regulation is all about trust. And of course, blockchain technology service there to help us, address some of those gaps. Collaborations, no doubt about it, is the way to go. But regulators, we want to be sure they are not playing the roles of players. Nevertheless, they should actually be ahead in the game. It takes a lot of research to actually explore this further. And it's interesting we have both Ethiopia, Zambia here, and then we have, is it UK or US? Yeah, what country are you from? Yeah, European Union. Yeah, checks as a matter of fact. And then we have my Nigerian brother here. Two of them, as a matter of fact. And you far away over there makes it all the beautiful thing which digital platform provides. So we need to leverage on that in order for us to be able to address these issues, especially when it has to do with trust, because that's a currency we do not want to tamper with, as the case might be. I want to thank you so very much, Dr. Juliet, for a wonderful presentation and anchorage of this session. And then, gentlemen, I want to thank you as well. But I want to ask you quickly to come up for a quick picture. Madam Dr. Juliet, you can join them virtually yourself and Dr. Yele, if you so choose to. And can I have Cyril come up here to join them as well, so that we quickly have this session captured for memory's sake. Most of our post-conference reportage are very important. All right, Ishola, in the meantime, I want to say a big thank you to the media guys in the house. From The Guardian, I have Adeyemi Adepitan, as well as Ayodele Adeniran. Thank you very much, guys, for being here. Leadership newspaper is in the house as well. Of course, NTA is obviously going to be fully represented. I'm very sure we have other media platforms online as well. A big thank you to MTN and Unified Payment, UP. As a matter of fact, I want to again personally recognize the Director Group Chief Risk Officer of UP, Mrs. Onchaya Danugo. You're welcome, ma. Thank you for all your support from UP. This has made it so much more what we intend to see. Pay attitude is also here, ladies and gentlemen. You want to make sure that you engage each of the exhibitors that we have on ground. We're going to go on a short interlude for about 5 minutes, and then we are coming back for the next section. Thank you, gentlemen and lady. This session is ended. Thank you, Dr. Yele. I look forward to seeing you in person. Still very much, Dr. Juliet. God bless you still. And so we're looking at some of these factors that we've said in terms of innovating together. Our next session is going to ensure we look at what we, in this particular forum, want to actually help to address, which will be competition and consumer protection. For me, personally, I'm quite very passionate about that because the consumer obviously ensures that at the end of the transaction, wherever the returns on investment is viewed, the consumer has to make that exchange. If the exchange is not coming, then if an investor doesn't know exactly how they can be able to measure what they have. And as soon as we're done with the next section, we're going to go on our break. and then we come back for the final aspect of the program, perhaps call it a day at the end of today. So ladies and gentlemen, can I have an interlude for 5 minutes while we get ready for the next session? Thank you.
Also, I've had ugly experiences too with the ATM machine. You know, sometimes you want to withdraw. Even as a merchant, you go because we withdraw from the ATM. So sometimes you want to withdraw 100K, 200K, you have to withdraw 10,000. You know, and it takes time, and you see it's some people, it will lead to even chaos on the queue and all those things. So I think that the CBN should make it possible that you come and then you can just punch in your 100,000 and then it comes out. It's not hard to do. If you can bring out 20,000, then I think you can bring out more. So they should just do something about it.
When it happens, maybe I use ATM or POS, they will deduct my money and they debited me. Within seconds, they will reverse it so that I can go ahead with the transaction. But recently, my recent experience, I was debited the sum of 6,500 or thereabout. I was debited. I didn't get the value, so I had to go into the bank to fill a form after waiting for 24 hours. Because if you don't wait for 24 hours, they will tell you can't launch a complaint. That you have to wait for at least 24 hours before you can complain, which I did. Then it took about 5 days or thereabout before they could reverse my money.
I used the POS and I got debited, but the person didn't see it and I didn't get credited back. And it took about 2 days. The only blessing was that she let me go, but she gave me her number and she said I could just give her a call and call her back. So when I got that after the second day, I had to keep calling to let her know that I wasn't running away with her money. But it actually she ended up getting it.
You get one certain time like that where I go bank, go use ATM, do transfer for person. At twice they collect the money safe. And now 30,000 naira the money be, maybe even small money for the country as far as the nation is concerned. You know how 30,000 naira be. I can't even enter bank safe, go lay complaint, say make the check for the put eye for the matter. You know, even the people come they tell me say make I no worry, say the next 24 hours will reverse the money. But it can't be like say I can't they can't they happy say they come the bank they lay complaint for like almost Monday, Tuesday, Wednesday, Thursday, 4 days. I don't go bank, lay complaint tire. Nobody do anything about it. They just tell me say make I no worry, say they go, you go reverse. Till today the money don't vanish into the air.
I had this event that I was supposed to go to. It was on a Saturday, so Friday night I had to make some purchases, like gifts for the wedding. So it was actually a wedding, so I had to make a purchase for the wedding. So I went to the POS. I did the first transaction, it failed. So I was like, okay, I still had like that amount in the account. I did it again and it failed. And that was like the only result. It was already night. There was no way I could, get money at that point. So it was like very frustrating. And this was a wedding I already planned for, I already planned that I was going to attend, come with my gifts and all the rest. So it was something that I didn't know what to do, and that day I ended up not getting that gift that night. And if I don't get it that night, there was no way I could get it in the morning before leaving for that event. So it was something that I could not handle. I was frustrated, I was very angry with the whole system. So at the end of the day, I didn't get my money reversed that day. They told me I should go there, I should come back in the next maybe 24 hours, and the next day that my money is going to come back, or I should go to my bank and report. I'm going to the bank. It was Saturday, the wedding was on a Saturday. There's no way I can go to the bank complain. So it was a horrible experience.
Faced with the growing demand for digital services in many African countries where access to finance hinders socio-economic development, consumer protection and data privacy concerns continue to generate strategic business challenges.
I can tell you that the consumers seem to feel the pinch of all this POS reversal and issues. I think the issue is something that needs to be fixed, because you have people, you've been seeing what's happening in social media media, people are going to their banks and having fights and creating a lot of nuisance. So I think there's going to be more engagement on how this can be done. How can it be processed? How can customers go into their financial institution and get something resolved? Also, in terms of consumer protection, I don't know what's in place. So maybe more of communication and engagement with people like us, so we know what we need to do in case the bank falters or the bank is not. I have a case for right now where my bank is not even replying me. So how do you protect my interests, and how do I get to communicate and engage with the right set of people, because I don't know who the right set of people are anymore.
The Central Bank of Nigeria commenced migration to a cashless economy with the major aim of enhancing financial inclusion. While this has helped the country to join progressive countries in the world using e-payment options, associated challenges have continued to subject many Nigerians to undue hardship.
Firstly, I don't know if there's any way these things can be sorted out. Maybe there's like a regulator that would work on these things or something. I don't know, but it's crazy. It needs to be fixed. Like, the government should look into it because it's not funny.
So I don't really think CBN is doing enough because, this is a recurring experience. And it's almost like every single time you want to use your card at point of sales, there's the fear that something can just happen. Like, there's that constant fear that you either lose your fund or you're thinking about the fact that when you go to the bank, the long queue to get your fund back, and sometimes, it takes days for them to even get back to you. And then sometimes you don't even get the money back because they tell you the money is hanging somewhere and all of that. So I would say that there is little or no effort on the part of CBN to correcting this so far.
There's a need for a regulatory body. There is a need for a regulatory body because that's depriving me of my money for the time being. I could have used that money to do something. So somebody withholding me for that number of days, then I have to complain. I have to stress myself before I can get my money back.
According to data from the Federal Competition and Consumer Protection Commission, FCCPC, complaint about services in the financial service sector made 33% of all cases filed by consumers.
I believe it's high time government to come up with a regulation that will compel stakeholders within this value chain to resolve these issues so that the uptake and the pervasive use of POS terminals increases in Nigeria.
The findings of a recent audit study by Inclusion for All to compare the actual cost of using digital financial services in Nigeria against providers' officially stated prices and fees recommends that addressing price transparency and compliance is key to protecting consumers and increasing financial inclusion. With low regulatory compliance and customer awareness culture across the continent, this trend is bound to further escalate if not checked. Against this background, the Regtech Africa Conference provides the platform for regulators, regulated, and stakeholders to engage, collaborate, and share knowledge around new technologies and practices that support better regulations.
Okay, where did everybody go to? It's not your break time. It's like the guys just left the podium and then we all... Ushers, please, could you get everybody in? We are starting the next section. After the next session, we now go on our break. And after the break, we are coming back for the final sections, the fintechs and ecosystem. Well, interesting enough, I think one of my madam brought to my attention, which I need to announce all over again. When we have the virtual session, by God's grace, tomorrow, it runs concurrently. It means that it runs at the same time when we are having this physical. But you can actually join the two sessions. All you have to do is to go in through the Zoho Backstage for Attendees platform. That way we give you access to be able to enroll into the virtual session while the physical session is going on. All right, so if you've not downloaded the Zoho Backstage for Attendees app, this is a good time to do that so that you can be able to access the two events happening at the same time. And the good news is that the virtual section is also recorded, so the organizers are going to make that available just in case you missed it. Then you have the Wi-Fi for free here. As a matter of fact, you want to take an advantage of that. I really want to also recognize one of my madams at the top, Madam Nosa Anderson. I recognize you from UP. It's good to see you again. Unified Payment is doing well in terms of the support they are giving to Regtech African Conference 2023. I also recognize MTN. MTN is doing well with us today. I can see the hall is adorned in the color yellow, but I think it's also Oriental's color, Abi, so to speak. All right, but we also recognize GVJ. Thank you very much for your support. Email the group. We say and recognize you. NCC as well as NDIC. Thank you all for making this happen and making it happen real good. Pay Attitude is in the house. Main One, a big thank you for your support. And this has made all of this seamless and definitely flawless. The next track is going to be focused on competition and consumer protection. This for me is one that is very dear to my heart because I realize that the aspect of competition and consumer protection is in the middle of whatever it is we are dealing with. And then this section obviously is going to be anchored by Sarah Colley. She's the CEO of Alliance of Digital Finance Association. And I want to be sure and know if they're already up on ground. All right, we are going into this section live. I want to be sure also if I have Jenny Radziwolek, the CEO of Regtech. I'm very sure I got her right. Is she in the house?
marketplace that was slightly easier to navigate for consumers.
I love that phrase. That's easier to navigate for consumers, because obviously even those who are licensed, we still have some experience challenges from them. But at least weeding out those who are not sounds like a really good first step, and also that we have some tools and techniques and regulation that can help us make that step. I want to bring in Mark here because he's finally joined us. Mark, we're not going to get you to go through your presentation because we've kind of moved through some of it, but I do really want to get you to bring in some of the insights that you've got in your presentation, and particularly around, so we've sort of been talking a little bit about data. I think there's two insights I'd like to draw from you. One is, what are the, obviously these apps are generating and creating and saving a lot of data. Firstly, what are the challenges of holding all that data and potentially the misuse of that data? But also, what are the positive uses that data can have in terms of, providing maybe access to other credit, etc. products? So, Mark, over to you.
Okay, thank you very much, Sarah and everyone. In fact, for me, I was very glad to have been engaging in this. But I don't know, Sarah, do you want me to just give a brief of the research, or go on just to answer your? Do you want to have a brief of the research?
Perhaps you could just answer the question around data for now, Mark, and then we'll bring in more aspects of your research as we go through the session. Would you like me to repeat the question, Mark?
Yes, go on.
So,
repeat the question for me.
Okay, so we were just talking about data and how we can sort of use some of the data that exists to identify fraudulent apps. Can we, what is, these apps are out there, people's mobile devices or tablets, collecting potentially a lot of personal information about the user. Some of that information can be used positively, potentially to feed things like credit bureaus and enable others to then provide lending to that consumer. But we also know there must be negative sides to that data as well around its misuse. Maybe you can share from your research in particular around those two areas, what you found.
Oh, okay. Thank you very much. Once again, greetings to everybody who is here with us. With the research that we did, okay, one of the major issues that we had to do with data had to do with what they do use the data for. So, for example, we saw that in one instances, one firm, after taking the data from consumers who were applying to take loans from the firms, one of the ways they used these data was to sell these data to third-party apps. And these third-party apps are usually not regulated or not registered. So what you see is that at the end of the day, after applying to receive a loan from any of these data apps, if your loan is successful or not, in the coming days, what happens is that you are most likely to be receiving loan apps that are not targeting you because they do know you need such services. So that is one of the issues that we found with the data, where they are able to now sell your data to similar or competing or regulated fintech firms. That is one. Another issue that I found out of the research that we had to do with the unauthorized access, to some of these apps to access financial services. And this
think perhaps from where he's speaking from, network issue. This is part of what the challenges we're facing. I think it's coming back still on.
Yes. Okay, so we saw that they had an unauthorized access. Some of the apps also had unauthorized access to the data. So we realized that a lot of the apps, apart from getting consent to download your locations directly into your messaging, your SMS messaging. So these are two critical issues. Apart from the unauthorized access that these firms have towards your data, we also realize they are able to also sell these data to competing firms. So these two issues are very critical towards our research that we did.
Great. Thank you very much, Mark. Are you able to speak a little bit about, the positives of the data? If the data, for example, if the data collected could be fed into a credit bureau, would you say that that would be a positive impact on sort of the ecosystem and allowing others to access with other providers?
Exactly. There are opportunities involved in some of these data that are being taken, whether the apps are regulated or not. Okay. So the opportunities are that, you see, because they have access to alternative data. Okay, these alternative data sources are usually ones that our traditional banking services will not use. So these firms have access to these alternative data, such as, for example, your mobile phone usage, even your social media activity, what you use your social media to do, including what you buy with your finances. Because they have access to these alternative data, some of these data can be used, okay, in modern theory to be able to access the credit worthiness of some of these consumers of such financial services. And the consumers of these unregulated financial services are usually those that are in low income level but can use but are included in the digital economy. So these could also point to alternative ways of assessing the creditworthiness of people. Another issue has to do with the data-driven insights of some of these firms, okay? So when you look at these firms, some of them generate quite a lot of data. Because of the models that they operate, they are able to generate large amounts of data on, for example, the borrowers' behaviors, okay, and also even the repayment pattern. So when borrowers comes for funds and they are able to pay or they are not able to pay, this borrower behavior and the repayment pattern is a source of information or data that by analyzing these data, firms can now be able to gain certain viable insights into consumer behavior. We will then be able to assess the credit risk, for example, of these consumers, and including other factors that can be used to, for example, improve upon the lending practices and be able to develop new products. So these data, apart from the alternative data that we are getting in order to be able to use it to assess credit worthiness, and the insights that we even get in terms of the consumer behavior and, for example, the repayment pattern, okay, if by analyzing such data, it can also even lead to us improving upon the current products that are on the market, being unregulated or deregulated. We can now use such insights that we have currently. So we see that certain firms, the regulated ones, are now also now giving out, certain banks, sorry, are now giving out what we call the instant loan, the quick credit. These are motivated. Some of these are motivated by the competition that is coming out from non-traditional financial institutions. So there are opportunities that we have in these data that we have out of our involvement in the digital financial sector. So this is what I can say towards this.
Great, thank you, Mark. And you've picked up on a couple of things there that I want to talk about. The first one being around access to that data and credit bureaus, and the second, market competition. So we'll come back to competition, but firstly, we can obviously hear data has its pros and cons. Used well, it can be incredibly enhancing and useful. Used neglectfully, it can be damaging and difficult. So we need to sort of focusing on the positive side. Credit bureaus are one way of holding some of that data in a fair and accessible way that would enable people to be able to access different products and services. However, we know that sort of some entities only are allowed to access the credit bureaus and others are not in some countries. It depends on their environment. So Paul, I know this was something of interest to you. How do you see credit bureaus being able to support more responsible lending?
First of all, I think credit bureaus, currently as we have them and because of the regulations that we have in our various markets, needs to also employ currently innovative ways of assessing some of these alternative data. Okay, so the question that we ask is, what data is the credit referencing bureaus relying on? Is it the data that is coming from the traditional financial services, or they are going beyond the perimeters of traditional financial services to now access data that are being driven by insights from the digital financial economy? So this is the question, but this also comes down to the regulations. Okay, how are our own regulators foreseeing some of these opportunities and make it possible for credit referencing bureaus to be able to tap into some of these modern data analytics processes in order to serve the financially excluded through some of these data that they may not have access to, that is currently being populated within the fintech field. So our own referencing bureaus would also have to be innovative, but it also boils down to the regulatory system. Currently in Ghana, the indicators and the pointers that the referencing bureaus use has nothing to do with, for example, your social media presence, has nothing to do with, for example, your spending pattern using, for example, one of the topmost fintech product, which is mobile money. It has nothing to do with data-driven insights from that area. It only mostly has to do with whether you have a loan from a financial institution, what was the repayment terms. So you are taking your historical data, okay, your historical credit data, and now analyzing that data to give you an information as to whether you qualify for a loan or not. So we would need an overhaul of our own regulatory environment in order to be able to use alternative data officially within our mainstream market. Yes.
Thank you so much, Mark, for sharing those insights and a lot of your presentation as well. I'm going to go across to Paul now. Paul, I just want to check if there's anything you wanted to add in addition to Mark's response, but also maybe you can start to touch on, the question, around is market competition enough to create good consumer outcomes?
Thanks, Sarah. And I think Mark's answered most of what I would say on credit bureaus. I think it can seem counterintuitive being at a Regtech conference and talking about traditional solutions like credit bureaus. But I was particularly reminded of the importance of them in one of the studies that we did in Kenya, actually with the Competition Authority in Kenya, where we collected transaction level data from lenders. And there we saw that there were often occurrences of multiple borrowing from individuals concurrently, right? So I've taken out a loan from provider A and provider B and provider C, and sometimes I'm doing all of those things on the same day. And to me that, struck a chord, because without some form of information sharing, some form of credit bureau in the background, then lender A doesn't know what's happening at lender B, and so cannot accurately assess, even with the best data, all the alternative data that you would like to have, it can't accurately assess my ongoing repayment burden, and therefore whether the new loan that I'm asking for is affordable. So it seems, like this is kind of going back to basics, but it feels like that is that needs to be in place, and it is difficult to put it in place because of the fragmented nature of regulation often. So if banks or traditional lenders are treated differently to fintechs or new lenders, then how are they going to start sharing material? And the example that Mark gave in Ghana, where you have to access credit bureau if you're a traditional lender, but not otherwise. And these seem like things where regulators can help solve the coordination problem between players. Because individually, no individual firm perhaps has the incentive to share their data, especially if you're a big firm. But collectively, it's going to make the market work better. I don't know, Sarah, whether you wanted me to pick up the question on competition and consumer outcomes now, or whether you want to move the conversation in a different direction.
Please go for it, Paul.
Sure. So, I think one of the things, we all think is necessarily a good thing in markets is that there are firms competing with each other, and that competition can drive down prices, it can drive up quality, and consumers would be off. And I think on the whole, in most markets, that's probably true. But financial services has got this kind of unique combination of factors they make it particularly difficult for consumers. So Jenny mentioned earlier the kind of behavior aspects, and how when you're designing disclosure or you're designing engagement and marketing, you need to be aware of consumer behavior. And it's precisely because of consumer behavior that actually sometimes competition isn't really going to force down prices, and it's not going to force up quality. So, to be more concrete, if I'm not paying attention to the additional charges that I might face in the course of my loan, all I'm paying attention to is, okay, I need to get a loan, I need to get it quickly, I've got a shiny app on my phone, it seems to do the job. I might pay attention to a headline price, but I'm not paying attention to all the other fees and charges that are going to come later. Then if you have increased competition in that situation, firms are going to be competing on how quickly they can get you a loan and how low that headline price is. But then they might just start increasing all the other contingent charges. They might reduce the quality of the customer care. They might have more stringent debt collection practices. And so actually, competition might be making things worse in this situation, or at least it's definitely not making things 100% better. So I think there's a balance to be struck, and an understanding that competition on its own isn't going to solve all the problems. It can certainly generate innovation, which I think is undoubtedly positive, but we also need to take account of behavior, of consumer behavior particularly. And that means firms need to take account of behavior when they're designing products and services. And it means, as Jenny said, that regulators need to take account of consumer behavior. when they're thinking about potential solutions, like how do they go about solving some of the challenges we've been discussing?
Thanks so much, Paul. And I want to come and pick on Jenny, but I'm just going to go to Sheila first, because I think there's a natural flow here. So, we're talking about trying to protect consumers better, help them to make better decisions. Sheila, from your experience with all of your members, what do you think are some of the actions we could, as an industry, be taking to protect our consumers better?
Yes, thanks, Sarah. I think for us, one of the starting points would be to get the consumer view in most of the discussions where issues on consumers are being decided. And this goes starting with policy and regulatory discussions, starting with business design, so that in those sessions where we're coming up with solutions to empower consumers or to protect them, we do have insights from consumer representatives and on a regular basis. Just coming back to what Paul alluded to, and also what Jenny mentioned briefly, discussions from Mary earlier. Usually, we do see consumers coming up with insights that regulators get, and let's say they come up with guidelines or requirements for licensing, which usually the third-party player, in this case, could be Google, it could be a telecom company, they abide by, but the predatory lenders are also quite tricky, so they'll find ways to navigate some of those. So you see the role that usually having consistent feedback from consumer representatives is critical, but also the role that the providers play. Besides removing some of the apps from the App Store and from Google Play Store by Google, recently they did announce that they'll also start processes to deny access to private data, especially around contacts and location data, and also images or the gallery for some of the loans, which is a nice step to see that business is taking a part in ensuring that they go one step further to protect the consumer. So ultimately, you do need all these unique partnerships or unique ecosystem players coming up with different solutions, so that when one place, the providers, the predatory market conduct practitioners find a gap, there are already protections in place to protect consumers. But also what we'd like to see really is to see that as these practices emerge in certain countries, because even with Google, with the licensing, even with the data access, new methods that are coming up, they're limited to certain geographies. For example, you'll find that it's usually Kenya, it's Nigeria, it's India, but like we saw, there are like 9 countries already across the globe within those same continents that are facing the same issue. So if we see one good practice in one geography, these are global companies would call upon them to also implement the same in other locations where they're working, so that all the consumers get to benefit from these advantages. But overall, we're looking to see a balance where we do not suppress innovation, while at the same time ensuring that consumers are sufficiently protected and empowered.
Much, Sheila, I think it's really important to say, there's many players that have a role to play in this. This is not on one person's shoulder. It is an ecosystem approach, and that's why I'm actually going to come back to you, Jenny, in 1 second, I promise. But I'm going to actually go to Mary and ask Mary, a follow-up question on that one. Is Mary, what else can providers who are offering digital lending do to support customers to make an informed choice? Because at the end of the day, we know our customers sort of know what they want, but how can make sure they pick something that is the best choice for them?
One of the things we actually recommend as the industry association for them is they need to introduce checks in the user journey, so that they are able to maximize the consumer exposure to information. Basically, you need to be able to introduce a friction to the customer whereby you show the breakdown of the individual costs, and also you show the final total repayment amounts. There's also the fact that they need to implement menu design changes that offer the ability for one to opt out to the services. And this just basically, it's in the product design element of it. And also just adding the fact that they need to be able to give the terms and condition in easy, understandable language and in bold formats where consumers can actually understand what it means. And in the terms, to be able to include all the fees that will be involved. In terms of communication, they need to be able to offer embedded financial literacy into the service and also offer the tools. So adding calculators in there so that you're able to calculate interest rate. It doesn't help giving a consumer just a figure of 15%, being able to help them calculate and know what the total cost will be. Also communicate what this product means and what the repayment period means for them as well. There's a very big gap on financial literacy whereby also even in the mobile money rail model that we've seen, whereby they don't understand what it means for me to transact with this digital lender. So we're advocating for the operators to actually even come together and partner and communicate to the end user consumers what it means for them to actually be interacting with or taking up this credit from these third parties and what their responsibility is and what the lender's responsibility is. So that really would help, and financial literacy is one of the things we say that will be able to drive that and push that knowledge and awareness bit of it. In terms of customer support, we just trying to recommend that they ensure that consumers know what is the recourse, like what is the communication channel, how do I get my redress, how do I get my complaints addressed, and who do I need to communicate to. So I'll give a very good example of how this has been happening in Kenya, whereby operators and digital lenders have been working together where you can raise a complaint, yes, to the operator, and they give you the number for the digital lender where you can actually approach them. There's also been coordinated efforts whereby both institutions talk to each other in case of a complaint is brought to them. And if, for example, there's a case of a fraud, fraud in terms of someone stole your identity and they took a loan on your behalf. So there's been those communication, including the law enforcement agency. So that's also another thing that could actually add to the value collaboration between all the agency, law enforcement, the regulators, the operators, and the digital lender providers. And lastly, in terms of data protection, we see that there's also the need to actually come up with regulations and rule on SMS and spamming. So this has worked quite well in Kenya, where you need to be able to show the regulator that this person actually opted in to that messaging service, and that is something that should actually be considered, having an opt-in option.
I think it's really important to, having that kind of customer recourse. And that's something that we know is, missing across, much of, sort of finding, being able to sort of say when people are having challenges and have them addressed. And as well as timely financial, financial education. At the moment you're thinking of borrowing is much more effective than, months before when you needed to. So thank you, Mary, for bringing up, lots of points there, and two particular that resonated with me. We're at a tech conference, so obviously I think it would be quite nice to sort of begin to wrap up our panel discussion by ending with Jenny. And Jenny, it's we're talking about some of the regulatory challenges that exist now, but with the explosion of AI and machine learning, it's actually sort of going to potentially become more challenging. Where's the innovation in regulation that we can look to that will be able to help support us with having more responsible digital lending?
Sure, Sarah. Thanks again. Yeah, as Sarah said, I think we've heard AI a few times this morning, and it's not different when we think about digital credit. In fact, AI is very much at the core of many of these business models. They use it for the loan classification aspect. Some of them have already started to use chatbots, and the fact that the adoption rate in this space is already more advanced gives us the benefits that we already have a bit of an understanding what some of the challenges are that consumers are experiencing in practice. And I want to start with kind of the support aspect, because Mary just brought up a few very important points. Again, when you kind of look at just a number of different digital credit apps, often they already have a design in place whereby the support option are very much trimmed down. So a lot of them at this point in time don't even publicly disclose numbers anymore for people to have in-person support, but instead only offer chat functions or social media channels or email addresses. So that already introduces challenges for consumers to reach these organizations. And when we're now looking at all the advances that are happening, and particularly with generative AI and large language models, I think it's quite a likely scenario that chatbots will become the new normal in generally in the digital space, but also for digital credit apps. So I think this will likely reinforce a lot of these issues and having, consumer complaints resolved or helping people resolve technical issues that will help them to repay their loans on time. So that's one aspect. The other aspect, and that's of course the bigger discussion taking place, not only in the context of digital credit, is, how do these models work, and what about the data that goes into these models? And I think we have a couple of unique challenges here again when we think about the African context and the digital credit context. One, again, when you think about transparency of these models, here again, when you look across public complaints data submitted by consumers, it's very easy to already see how frustrated many of the consumers are about not understanding why they may have been rejected in a particular loan. There's very little transparency, and the same applies when you look about the disclosure about digital credit lenders in terms of, providing information about what type of data they are using in these models and how the algorithm works. It's very vague. It's barely not existing. So you have a transparency challenge. The other challenge is that, because we're using alternative data sources, and in some of those cases, the threshold in terms of the volume of data that's required for these models to work effectively is quite high. So it works well with certain parts of the population, but you have certain segments in rural areas that may not produce this level of digital footprint. And so you may have an adverse effect where, you design a digital credit app with a financial inclusion goal, but then you have people who are not producing enough data, and actually you are reinforcing the financial exclusion in these segments. So that's something also to be very mindful of when we're thinking about the use of AI and the use of data in that context. Now, again, from a regulatory perspective, I think there's, globally a lot of discussions. It's not a new topic per se. I think there's, a number of things. There's no silver bullet solution, so a number of different mechanisms. I think what's clear is that we've reached a point in the evolution of AI where standards, in terms of proper regulatory standards and guidelines, that's no longer optional. I think, again, some of the details of that are still being hashed out, but the general consensus of what we need is some minimum standards around explainability of these models, again, coming back to the transparency point and creating a better understanding how these models work. And again, when we think about that, we also need to recognize consumers may need different information than the regulator needs. So carving that element out is very important when we think about that explainability element as well. The second point is then, the data aspect that I just mentioned. And I think that in an African context, we may need to take a very critical look at the types of data, the alternative sources that are going into, and maybe regulator need to go as far as, either setting out requirements in terms of the characteristics that this data have, or maybe even one step further to say that certain types of data sources should not feed into the model at all because there's too much of a risk that they could, again, introduce bias or introduce issues from a financial inclusion point of view. So that's, I think, a really important element that needs to be rethought as well. We need to think about testing standards so that lenders themselves have proper testing of these models, but potentially then also expand that and look how third-party testing of these models could take place in practice. So these are all a number of areas that, again, need to feed into these guidelines. And then we talked briefly about the consumer support mechanisms, again, for the regulator to set requirement of what needs to be in place and still somewhere in all of it ensure that there's a human channel that people can reach out to if the virtual solutions do not help. So you got that regulatory guideline aspect. I think another opportunity when we think about how to deal with AI is, to leverage the innovation infrastructure that's being created, right? When we look across Africa, I think on my count, we have now close to 30 regulators that have created regulatory sandboxes. So moving forward, there is an opportunity, certainly not for all credit lenders, but for some of the ones that may have a more complex business model, to not initially license them so they can offer their services at full scale, but rather have them go through a regulatory sandbox approach first, to test it in a controlled environment, understand the impact to the consumer, and also use the feedback from the consumer to inform the design of their business model. In some other regulatory sandboxes internationally, we've also seen a very interesting approach in the use of synthetic data. So maybe that's something to consider as well, to not even go directly to the consumer, but to test some of these models with that type of data first, because letting it go to the market. And I think we're coming back to some of the points that I said initially in terms of the regulatory capacity. Regulatory sandboxes can also be a very valuable tool in that regard, in that they give regulators the first-hand insights and provide an opportunity to build out their own capacity and expertise in this area, which they then need for the ongoing supervision in that space.
All right, Sarah, we might have to be able to wrap up the session. So you have some few minutes in order for us to take the opportunity to take one or two questions, and then we summarize and then call it a day for the competition and consumer protection track. Pardon me, over to you. Sarah, over to you.
From the audience, we haven't got any online.
All right. Do we have any questions? Wonderful. The word had not dropped, and I have raised hands. Impressive enough, the section actually has some questions, but we're going to only take two because we're going in for break. We still have one final section. Please, can we have an extra microphone? There. Okay. Ladies first. And then I have a gentleman there. Thank you. Your name, organization, and then quickly to the question so that we can end up with this Q&A session.
I'm from FSS 2020. So I have a question regarding blockchain, regarding immutability of blockchain. So I'm asking, how do you balance immutability of blockchain and consumer protection? Because these data are imbibed in this a model, maybe the model is of blockchain technology, and we know that it's very difficult to delete those data. So I'm thinking now, how do you balance it, consumer protection and immutability of such data in blockchain technology?
All right, Sarah, you got that? Very short, Jenny. All right, we have the other gentleman there. Blockchain. Oh, okay. You're from Zambia. We have to give you the mic. All right. Yours is a question. Please go ahead.
I just wanted to probably follow up to Paul Adams's contribution regarding the degeneration of what may be termed as useful credit, digital credit. I know a use case, for instance, in Zambia is one where we do provide financial literacy to the consumers, but we still get times where this consumer gets credit, accesses credit, doesn't pay back. There are already warnings, by the way, that the credit standing will go to the reference bureau, credit reference bureau, but they simply abandon that SIM card, go and get another SIM card. So I just wanted to get views on how that information that's being generated and transmitted to the Credit Reference Bureau is being used for possible non-access to a new SIM card, for instance. Thank you.
All right, thank you very much. That's the second question. The last question, the gentleman behind there. Mubanga happens to be one of our speakers, so.
My name is Uwamedimo Atabo. I'm from Eotulo, I'm a lawyer. My question actually stems from the conversation from Jenny particularly, the privacy concerns regarding the digital lending. I mean, over a couple of years now, from 2019 or so, we've seen a rise in digital lending, particularly without collateral. Unfortunately, that procedure or that strategy has led to a lot of data protection, breaches from the service provider or the digital lender's part. So my question is, do you think the release of regulations from the regulator, particularly concerning the recovery of debt by these digital lenders, would have an impact or actually reduce the level of breach that has been, or breaches that have been evidenced through this strategy? From the service providers aspect, they could actually come up with they could actually come up with strategies to recover their funds, of course, with engaging with lawyers, also in consideration to the provisions of the EU GDPR and the NDPR on data processing and data practices. But from the regulatory aspect, in terms of recovery of debt, do you think the regulators' release of regulations on debt recovery for these digital lenders will have an effect on the data breaches that we've seen over the years? Thank you.
All right, thank you, Sarah. Just quickly, we have two questions from our online attendees. One is, in light of the most recent Meta debacle and being aware that a lot of data is hosted in America, how can we ensure that African consumers' data is obviously protected from intrusions by foreign governments? The second question is from Vanessa Obi. Vanessa Obi, thank you. She's focused on data protection and privacy, cybersecurity. The question is, in light of the most recent, apparently it's the same question. The second one has a name. So that question is from Vanessa Obi. In terms of the recent Meta debacle and being aware that a lot of data is hosted in America, not in Africa, how can we ensure African consumers' data are protected from intrusions by foreign governments? So everyone is trying to protect their data. So we have two questions of three. Gentlemen and lady, I want to say a big thank you for participating with your questions. So as a way of wrapping up this session, Sarah, we're going to hear from Jenny or from Mary or whoever responds to in the next 5 minutes so that we can be done with it. Thank you.
Jenny, do you want to go?
Yeah, I think, I mean, there's a couple of interesting questions from the data protection point of view. I think, you know, to some degree, I think there's a connection there. But to take the first question regarding where data is housed, I think that there's obviously, I think, a valid concerns in terms of, where data isn't housed directly in Africa. What does that mean from an intrusion point of view? I think, again, I think when you look at there's a couple of thoughts here from my end. First of all, when someone provides digital credit in Africa, depending on where that takes place, we would hope that entity is licensed. So, provided that is the case, that entity would be subject to certain risk management requirements, and these would, from a regulatory point of view, also involve standards in terms of how they need to protect the data, and that standard would be independent, essentially, where the data is being located, right? Whether this is in Africa or in the US or somewhere else, the risk management requirements that are imposed on that entity are the same independent of the location. And so it obviously creates some additional challenges from a supervisory point of view, but the basic standards and expectation would be the same. Now, there's another component, of course, where if we feel that is of particular concern to then, as data privacy and protection regulation is being evolved, to set certain location requirements that would ensure these providers house their data in Africa, which would give a little bit of greater control and visibility of regulators into those aspects. So those are some immediate reflections on that one. I was not sure about what I fully understood the other question from the gentleman in the audience, so I want to be careful in terms of how I respond to it. But I think generally when, in terms of some of the data breaches that are happening, I think the moment you make it, introduce new requirements that would make it easier for providers to navigate how they can deal with the data, you can of course have another, or how they can access other data that would enable them to recover their funds. Yeah, I think yes, there would likely be a positive impact in reducing some of those data breach issues, right? The moment you provide clarity, I could see that having a benefit. But again, I think maybe I have not, to a full extent, appreciated the question here. So apologies, and happy to have maybe a conversation afterwards on that aspect.
I think we have a question for Paul as well. Or Paul was going to respond. Sarah? Okay, Paul.
Yeah, very happy to respond very briefly as well. I think there are two things to the gentleman's question in the audience. It's great that you're providing financial literacy training. It's great that everything is clearly disclosed and explained. These are all positive things. I think the underlying kind of fundamental fact of lending markets is you're never going to eradicate defaults completely. Like, even with the best will in the world and the best data in the world, there are just going to be kind of, let's say, facts of life that get in the way, unpredictable events that just mean that some consumers will always default. So, we should just try to minimize those, but, you can't plan for every eventuality. The second answer to the question, which I think is what you were hinting towards, is that some people are intentionally defaulting and then simply getting a new SIM card so that they can borrow again, or so that they can sort of start with a clean slate. Interestingly, Mark's study touches on this intentional default. And I think when you're dealing with unlicensed lenders, maybe that's a good thing, right? Like, maybe that's just what the unlicensed lender deserves. When we're talking about, a market that's functioning well, everybody's licensed, that's where the credit bureau if you have sufficient linkage between the lending that happens, the information in the background, the ID checks when you have to get a new SIM card, if all of the background is linking up, then it should be fine that I get a new SIM card if I want to, if I want to continue to use, use the airtime and to make calls or whatever it is that we normally did with phones a few years ago. But then there should be a limit, right? Because now I'm part of the credit bureau. The credit bureau can see that I defaulted on a previous loan. Then I don't get any more loan on my new SIM card. And that should really be how a credit file, a credit bureau, linked with identification measures can help limit this opportunistic, intentional defaulting from consumers, and actually make it easier for firms to lend, because then they can, they can screen out those bad customers, and they should be able to lend more to the good customers. So I'm going to draw a line there and leave it to Sarah or the host to decide if there is time for more questions.
I doubt it, but Sarah, because we are pressed for time, I'm going to have to wrap up this session in the next 2 minutes. So I'm just going to give the floor to Michelle and Mary to just speak for 30 seconds each as a way of wrapping up the session. And of course, Dr. Fami, if he's there. And then I'll say a big thank you to every one of you. Over to you, Mary.
I just actually wanted to add on to what Paul was saying. So the other thing you could do, the way from a Kenyan market, what we've seen happening is that you make it such that the credit is attached to spending, so it is risk-based. So you tire your customer based on their spending. And so when the credit, and now going back to your question in terms of how does that help address some of the defaulters who are doing it intentionally. What we've been doing is that all the SIM card is tied to your identification card, and the reference bureau, the credit reference bureau, has your detail based on your ID card. So if you try to borrow, not just from the digital lenders, it's including banks, they have your credit history, so it blocks you. That's a way to avoid that. However, CGAP did a survey on why consumers actually default, and some of them it's just they were trying the app and they don't have the money to borrow. So some of these things, as much as there's the financial literacy aspect, there's also a need to actually also ensure the process, the back-end process from the providers has been streamlined such that everyone is doing the proper checks that they're supposed to. There's the proper ID verification done and registration process.
Can we hear the parting words from Sheila?
Thank you very much. I think for me, my parting words, especially around innovation and this being the Regtech conference, is around just tweaking some of the existing solutions in place, whether it's regulatory sandboxes, like Jenny said, we have 30 countries in Africa that actively have those, ensuring that the consumer voice is integrated in those to ensure that the harms affecting consumers are realized, but also we understand the different layers within product design where consumer harms could be, consumer risks could arise, and ensuring that we design both policies and solutions with a comprehensive voice of all the key players within the ecosystem. But just ensuring that the consumer voice is stuck and regularly incorporated in that as well. But thank you everyone, and really exciting presentation.
Dr. Mark, 30 seconds.
Thank you very much. And for me, it's been a very good session and a lot of takeaways from the program. Yes, I would add my view just briefly to the last comment that came the other panel before Sheila. Yes, which had to do with the loans where people default either intentionally or unintentionally. She did mention some of the activities that they have put in place in their own country, and I wish to add that in Ghana too, our current national ID is linked to the SIM card registration, which makes it almost impossible for you to default on a loan and seek another loan elsewhere with the same SIM card. Yeah, so I needed to add this. So thank you very much. It's been a very wonderful session, and I'm glad to be part of it. Thank you.
Sarah, I'm going to leave the final conclusion to you. You want to thank everybody. It's your moderating session, but I had to come in because of time. So you want to say thank you to all your panelists in the next 30 seconds?
Thank you, everybody, for a wonderful conversation. Thank you to all the questions that have come in. And for me, the key takeaway is we can only have responsible lending practices by working collaboratively together and all of us playing our part in this process. So I look forward to more discussions on this as we go forward. Thank you so much to the conference for hosting us.
Hands together for them. Well, if you guys can join us virtually, Sarah, Sheila, Paul, and then Dr. Mark, we're going to take a photo section, right? So I'm going to ask Jenny and Mary to come up. Cyril, please, can you come up as well? Let's quickly, the cameraman is on ground. Let me quickly say a big thank you to Felix Ojokwe. You are online with your question. I'm glad that the answer has been given in your chat box. But please, all of our speakers and panelists are still very much around to entertain and take all of the questions that we possibly have. And this is part of the essence of why we encourage each one of you to please leverage on the Yoho platform. The Yoho platform gives you all the opportunity to speak directly with all of our speakers in the house. You can also create relationships as well. And that is quite important for me to announce still very much. Quickly, let me kindly introduce Mrs. Freda Bruce Bennett, Deputy Director of Digital Economy, NCC. She's representing the Executive Vice Chair and CEO of the Nigerian Communications Commission. Please, is she in the house? Can you put your hands together for her? You're welcome, huh? Thanks to NCC for their huge support. Quickly, I want to also encourage us to go through the QR code. The QR code is just behind your tag, and then it's also somewhat on the registration spot, the red line, the media wall. Please do that so you can access the agenda and the brochure. As you've noticed, none of us have any printed materials on our tables, and that is because on the Soho platform, you are able to have access to everything. As a matter of fact, I've been engaging with one or two, three people already in the house. Please take an advantage of that. It's important. There's a whole backstage for attendees. Maybe later on we can have that beamed on our screen. And also, finally, the hashtag for the conference is Regtech African Conference 2023. And there is free Wi-Fi. Free Wi-Fi is very important. You know, maybe during the break time you can choose to download Game of Thrones or digital combat team series. It is your own choice. Or you can do the next one that deals with AI, you know, whatever it is, trying to get your data in the well-secure pod. Or you can also unveil the one with NCC, providing us with wonderful services. We have all of that, especially with NDIC and EFCC already in the house. UP and MTN, we recognize you and we say a big thank you one more time. The password for the free Wi-Fi, thankfully, main one gave us the broadband, is regtech _at M1. M, if you're speaking phonetically, EMU, if you're speaking with the one we know, is called regtech _at M1. Ladies and gentlemen, please let's take an advantage of that and ensure we engage with one another. On the Zoho backstage for attendees platform, when you register, you have access to all of the different sections. You can make your commitment under the aspect of attendees. You can meet 1, 2, 3, 4, 10, 20, 50 people as you may so choose, of course, with our panelists and speakers and presenters. Ladies and gentlemen, I can tell you that I am famished. You can sense it in my voice. My voice is not as sharp as it was in the morning. So I need to go get some energy. I know some of you too want to do that. So we're going to go on a break. The break is going to be as brief as possible because we still have the last section for day one of the Regtech African Conference 2023. A global affair, as a matter of fact. We have people all around Africa, Europe, America, all joining us physically and virtually. And please take an advantage of the networking opportunities. But this is what we're going to do. I'm going to ask my very good friend Chris. The Chris is the bouncer behind there. And then whatever Chris tells you, please listen to him. You can see his chest is far more digitally spread than I own. So, for your own good, kindly listen to Chris. However, the ushers are going to direct us accordingly for us to go for lunch or for break. Whatever meal you see, just take what you know, especially my very good friends from South Africa, from France, and the rest of that. I'm not sure if we have laxatives or we have what they call it, alabuku, or we have Andrew liver salt. Well, please, you can ask the organizer to make you make a choice. However, we're going to ask the ushers that are going to direct us from this table. We're going to all go out through this front door. So you just go in this front row, this second row, just follow that lovely lady and then that good-looking gentleman as we all go for lunch. And we're back here in the next 30 minutes, more or less. And please, 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 be mindful of your personal items, your phones, your laptop. I can see a phone just lying there on the table. Please make sure you're mindful of your phones, your laptops, your handbags, especially our wonderful women, and to make sure that we are here to have a good experience. So, ladies and gentlemen, lunch either way has been served, so please let us go accordingly. Technical guys, I'll need some background music to make sure that the food goes in fully. So please go accordingly on the front rows, and the ushers will follow you through. Please, nobody should go out through the back door. Chris, the bouncer, is to ensure that when there is a need for us to open that door, we will do that. So please, kindly, quickly do this so that we are back here in the next 45 minutes to wrap up the last session. Thank you.
Let the host of heaven hear your voice now.
Yep. Yes, I hear you. I hear you perfectly clear. Can I be heard? Is everyone hearing me? I'm losing you now. I can't hear you very well. Okay, good. Yeah, yeah, yeah. Whenever we're ready. Okay. Uh, okay, I'll get started. Well, thank you very much, first of all, to Regtech Africa for inviting me to give this very, very brief presentation on the Association of Governance, Risk, and Compliance. I'm going to walk you very quickly through some slides just to kind of introduce all attendees to the work that we're doing. I also wanted to point out that the Regtech Africa is one of our official training partners in Nigeria and the rest of Africa. So this is a good opportunity for me to kind of introduce this partnership and let all of you know that we're working together to bring a lot of these certificates and also membership opportunities to Nigerian GRC professionals and professionals in the region. So to get started, just very quickly, I'm going to tell you a little bit about ourselves. We're a global nonprofit professional accreditation and certificate organization. We're also a networking platform and membership-based community. We were founded in 2020, but we really started operations in 2021 as a nonprofit out of the UK. Basically, to kind of frame things nicely, there are two sort of roles that we are participating in or that we're focusing in on as an association. On the one hand, what we want to do basically is we wanted to create these professional certifications in GRC topics. We wanted to kind of provide these accreditation or professional qualification opportunities to professionals throughout the world. Part of what drives us is to make these qualifications or certificates as affordable and as inclusive as possible. I will talk a little bit later about the different certificates that we have available. And then on the other hand, what we want to do, or that what is basically one of our kind of primordial or most important sort of driving factors of why we actually exist, is to create this sort of community network, membership-based association where people can connect, where people can discuss ideas, where people can learn, where people can develop thought leadership, put together research projects where they can develop the business, lead to careers, projects, etc. So basically, what we have is we have an entire portal which works sort of like a mini LinkedIn for GRC professionals, where basically you're going to have access to videos, resources from our partners, forum discussions. You can there are things that can happen on this membership portal. So these are basically our two driving factors. Basically, the certificates on one hand, and also this sort of membership. Membership-based community or network that we have created. In terms of numbers, just to give you an idea as to how much we have grown in the past 2 years, we have close to 2,000 members. Right now, we actually might be around 2,100 members from more than 50 jurisdictions in the world. We have a very heavy presence in the United Kingdom, in Cyprus, in Estonia, in Saudi Arabia, in Belgium, and India, and also in the rest actually carry out. We're talking about compliance, anti-money laundering, onboarding, risk management, legal. You have some accountants, customer relation functions in general. We do have a lot of students that have done corporate governance, which is a bit more overarching or general. And there we have people in transportation. 15 to 20 hours of training program, which includes both video and text-based content. You get 2 chances to pass the AGRC exam, which is taken with a third-party provider called UCAP. Then you have also 1 year of free membership to the association. And then with that, if you're successfully passed your exam and have completed the program, you can use the PAGRC acronym, which is basically saying that you're a professional member of the association. So it's a nice bundle that kind of includes everything. You don't have to, book your training program on one side, book the exam somewhere else, book the membership somewhere else, etc. So basically, I think this is one of the things that kind of facilitates the process and whatnot. So why Africa? I mean, this is something that it is a very large continent with a huge population, a lot of young professionals who might be looking into the GRC profession. So what we wanted to do was kind of introduce these global certificates to the African continent. All of this material is very well researched, it's comprehensive, so it applies at a global scale. So this is knowledge that African professionals can use in their day-to-day work. We also want to provide these networking and learning opportunities for Nigerian and African GRC professionals. Part of what we want to do is create a Nigerian chapter of AGRC, where your Nigerian AGRC professionals, AGRC members can get together and host, regional events, local events, and other such sorts of networking opportunities. At the same time, we want to provide, African professionals, recent graduates, or people looking to reskill or upskill, or who want to change in career. Basically, we want to provide them with career building opportunities. Whether you want to start a profession in GRC or whether you want to actually go into GRC or transition from, maybe you're an accountant for 20 years and you decide you want to get into anti-money laundering or you want to get into compliance. So this is part of our purpose, our goal. And in light of this, basically, what we have done is we have approached Regtech Africa. We have started working them to kind of facilitate the introduction of AGRC to Africa. So, as one of the first steps in this partnership, what we have put together is a platform. We have put together it's sort of an e-shop for Regtech Africa. It's basically their own online training academy that it's also done in collaboration with the London Governance and Compliance Academy and the European Institute of Management Finance, which are also AGRC's training partners. And basically here what can happen is, any Nigerian professional can go online, they can purchase the different qualifications, they can do everything online, become a member, etc. So this is basically, in a nutshell, what I wanted to present. I took about 10 minutes, so that's good. I know there's not a lot of time for questions and that, we're running a little bit behind schedule, but I would like to, invite all of you to go to the exhibitor booth. We have an exhibitor booth. Please feel free to, make an appointment to speak to me tomorrow, or basically, pass on your contact information to me, and I'd be happy to, send you an email once the conference is over, and we can, chat next week, set up a call to kind of discuss a lot of more of these topics in detail. Also, feel free to reach out to the Regtech Africa team, Cyril, who is kind of leading this effort, and he'd be happy to provide you with more information on this relationship between AGRC and Regtech Africa. With that said, I want to again thank a lot to Regtech Africa for inviting us, for giving us this opportunity. Hopefully next time around I will be able to be with all of you in Lagos. I haven't been to Africa yet, so that might be a good opportunity moving forward. So thank you very much, and a great rest of the conference to everyone. And I'm here for any questions, anything that might be needed. Please feel free to reach out to me. Thank you. Yep.
Yes, I can see. I'm Nafisa. I don't know if you can hear me. Okay, I think we're having a little bit of a challenge. Our moderator, Kwame, we can't. Okay, he's here.
Thank you, moderator. Thank you, MC, and thank you for having me. As already discussed, or as already mentioned, my name is Martin Kwame Awaga, and I'm the president of the Ghana FinTech and Payments Association. Today's discussion is going to be very interesting, and we'll have a presentation first off, and then we'll delve into the panel discussions. So, as already mentioned, my panelists have already been introduced, and so I'll go straight to take the presentation from Nafisa Usman, who is a regulatory and financial technology specialist at the Central Bank of Nigeria. So, Nafisa, over to you. Thank you.
I'm sharing my screen just to confirm it's visible. Hello?
Yeah, please go ahead.
Okay, I'm sharing my screen just to confirm that my screen is visible.
Sure, it is. Thank you.
Okay. Good afternoon, everyone. I joined the session in the morning. I think I remember the moderator in the morning saying we don't want what is happening around the globe or what is happening in US to happen to us in Nigeria. That's why we're gathered here. It's not gonna happen to us, hopefully. But you could see that's why I share the first screen I have. We could all see it's all bad news, good news, bad news around the globe. So, and then let me just quote on a little bit of statistics. According to the 2022 Bureau of Labor Statistics, data cited in Harvard Business Review, roughly 65% of companies in the US alone failed during the first 10 years, and only about 25% survived for 15 or more years. What was that? What happened? What factors could result to this? So from the screen, you can see it has all bad news. I could see Facebook owners meta hits with records. I can see some issues around data protection, which is what is in line with compliance. But the bad news, this is Nigeria. Good news, at least from Nigerian perspective. My presentation is going to be, I'll be talking from Nigerian perspective. So my presentation will be from Nigerian perspective. So good that from the perspective I'm talking, it's good news. We have good news. I could see profits. This is just in March, 1.6 billion transaction around the fintech ecosystem. Wow, that's good. My name is Nafisa Usman. I'm a postgraduate researcher in Southwood Business School, and then I'm a data analyst with the Central Bank of Nigeria. My research, I'm doing a research, and my research interest is around fintech, financial regulation, money laundering, financial literacy. Like I mentioned, Nigeria is my case study, and then regulation on its own. So what am I looking at? I'm looking at fintech and money laundering. Is there a relationship? And then if there is that relationship between fintech and money laundering, what is the impact with when regulation is there, financial regulation, and when financial literacy is there? So my study attempts to examine the relationship between fintech and money laundering, looking at bringing in financial regulation and financial literacy as the moderating variables. This is the theory I'm using. I'm using the technology determinant theory to determine the impact. And then this is the framework, the model of how I'm doing it. So fintech is the independent variable, and then money laundering, interrelated, the dependent variable. Then coming in, bringing in regulation, financial regulation, and financial literacy. So what happened? So I came up with, my team and I came up with 3 hypotheses. The first hypothesis is financial technology has significant positive effect on money laundering in Nigeria. If it does, what about financial regulation? How does it moderate that relationship? And then financial literacy, how does it moderate that relationship? You can see a little green light there. So after doing the analysis, I think some people in the hall must have come across, like 5 months ago, maybe must have come across around my survey. I pushed in a survey. With a quantitative survey, I pushed in a survey to get in data from any fintech users. What am I measuring? I'm measuring POS-based financial transaction, mobile-based financial transaction, ATM-based financial transaction, web-based financial transaction, where fintech has 20 measurements, money laundering 11, financial regulation 5, and financial literacy 5. After going through, I don't want to bore you with the statistics of what happened. Like I mentioned, I pushed in a survey and I got respondent. I pushed in survey. Just when you enter my survey, when you tell me who you are, where you're from, I just randomly allow it to see how it's going to capture from the map. You can see around Nigeria. And then, like I mentioned, for the fintech aspect, this are what I'm measuring. So I got, after cleaning the data and tidying it all, I was able to do a regression analysis using 248 clean data, which is good. It's around the theory, around the justification of the theory of what I'm using. So what happened after I pushed in that and after the regression? Going back to the hypothesis. If you remember, I had 3 hypotheses, 1, 2, and 3. One is the relationship between fintech and money laundering, which was supported, meaning there is actually a relationship between fintech and money laundering. The second is, since there is relationship, how does regulation impact? Yes, there is regulation strongly impact on money laundering, but the thing is, financial literacy does not really impact on the relationship. That, I'm still a researcher, I'm still conducting my research. That's why I'm here. That's why I joined the session, to get in from like minds and then knowledgeable people from you. So the relationship between fintech and laundering. So what does that indicate? That is indicating that financial literacy does not really influence the effect of money laundering and fintech. I would like to hear what happened. I'm still investigating, I'm still researching, but I would like to quote one of my mentor, Professor Olayinka David West. I think I remember watching a video where she mentioned, after the central bank has pushed in the fintech strategy framework, she said that is a good effort done, but there is a data analysis. I don't have it here. But she said there is analysis that was conducted that shows that the fintech, why the fintech are one of the reasons, I think, why financial literacy will not moderate it, because the fintechs are highly educated, highly sophisticated, we could say, for those that are lack of those that have no financial literacy. So definitely you must be financially literate to be able to even do the fintech, because even from the questions I'm asking, they're a bit high level for somebody that has no financial literacy. So then what is the research recommending? The research is recommending why we're here. The research is recommending this gathering. The research is recommending what we're actually doing, because my research is recommending, no doubt, banks and fintech partnership is definitely about to face, or is already facing, because fintech is really, really disrupting the financial ecosystem. So definitely is facing higher regulatory risk, while direct fintech regulation is also emerging. So my study so far recommend urgent, strong, and technology-oriented regulation intervention to reduce money laundering related issues, such as the next generation of cash and payment infrastructure, cryptocurrency, and central banking digital currency, which I think as a country we're doing well. So basically, what does this research recommend? This is a little ecosystem, build fintech community, all coming in together. What does it recommend? We're recommending strong coordination, collaboration, partnership, all together, so that one fintech could be formally recognized into the central bank into the former central bank system, which we're already in there, but at least fintech, with the way the operators are maybe tiered layers, so that this will form the discussion of our panel. So what the research contribution, of course, is towards policy, practice, reaffirming the theory, and then construct the methodology, because it's a new methodology, so at least it shows it can go into that it's a methodology that can test the impact of fintech and money laundering. So Nigeria, like I mentioned, this is a video that I think it's refused to play, but it's the sandbox, the regulatory sandbox. So like I mentioned, Nigeria as a country, I think we're doing well. So these are some efforts, just a few of them, Nigerians' effort towards regulating fintech. And I think we're doing well as a country. So this, by presentation, forms an introduction to our panel discussion. This is the National Financial Inclusion Strategy. All that we've been discussing, all that we're here, we know we are all into the financial ecosystem. We know the National Financial Inclusion Strategy is like the little Quran, the little Bible that we're using to all see into inclusive economic growth towards financial stability. Thank you very much.
Thank you, Nafisa, for that presentation, and it was very enlightening, and it's kind of set the tone for the discussions we are going to have today. As basically, it has to do with fintechs and ecosystem, particularly fintech regulation in the age of the platform economy. Now, what is a platform economy? Now, platform businesses or economy allows for collaborations with non-traditional partners and bring together different categories of customers. And in the financial context, savings or savers and investors or lenders and borrowers create large scalable networks of users. Now, the entry of platform businesses into finance promises potential benefits to consumers in the form of new products, lower prices, convenience, wider choices, and enhanced consumer experiences. Now, at the same time, their models and technologies potentially threaten the dominant positioning of traditional financial service providers and create challenges for regulators. Now, in creating challenges for regulators, we're also going to discuss a little bit about how regulatory sandbox is shaping digital innovation in the era of fintechs. So we've heard from Nafisa, where she indicated that there's a correlation between fintech providers, and then money laundering activities. And so the backstop there is regulation. So how are we going to leverage on regulation? Particularly now, we are seeing a lot of the regulatory sandbox initiatives across African continent. In Ghana, we have it. It has been launched. We have the same thing in Nigeria, Kenya, and other places in Africa. So that is becoming one way of regulating the industry. Now, a lot of times we talk about regulatory sandboxes and would like to know what it means. Now, a regulatory sandbox is actually a controlled environment that allows for entrepreneurs, regulators, and other players in the fintech industry to test out new financial products or services without being too constrained by inappropriate regulation. So on this panel, bear with me that we have the expertise, particularly ranging from regulations down to service providers in the industry, to discuss some of these things. And so without further ado, I'll dwell straight into the questions, and then we'll see how we would help Nafisa in terms of getting some solutions practically, and having established the theories or the hypothesis around regulations in the fintech era. So my first question would go to Nick. You are with the Alliance for Innovative Regulations. In 2 minutes, just tell us what you do there, and then thereafter I'll follow up with the question. Thank you.
Thanks, Kwame. Good afternoon, everyone. Pleasure to join you all remotely today. I'm Nick. I'm the Chief Innovation Officer at AIR. AIR is the Alliance for Innovative Regulation. We are a non-profit that works with regulators, central banks, and ecosystems around the world to support learning, experimentation, and development and scaling of desirable technological innovations to make financial markets and regulatory systems fair, inclusive, and resilient. I was previously the Director of Innovation at the Financial Conduct Authority, so the FCA in the UK. where I had the pleasure of leading the division that was responsible for the FCA's FinTech, Regtech, and supervisory technology programs. So I led the area that was responsible for the sandbox and for tech sprints and for the FCA's internal programs around data science, artificial intelligence, and machine learning. So yeah, really, real pleasure to join you, and thanks for having me.
Per your own submission, in terms of what you are doing or what you've done, we see a strong background in regulations. And so my first question to you is, in the context of the platform economy, as we are all witnessing now, what are some of the key regulatory challenges that financial authorities, leveraging on your background from the financial conduct authority, what key regulatory challenges does financial authorities and policymakers face when it comes to overseeing and regulating fintech companies, particularly those operating within the platform ecosystem?
I think there are several. I think the first is one of classification and definition. So these platform businesses, by their nature and by their business models, can sit within and also outside of established regulatory perimeters. So defining whether or not they're within the scope of regulation can be one of the first challenges for these types of organizations. They have non-traditional business models. They might have non-traditional structures and what are not. And then that presents another challenge for regulators into scope. So I think that's the first one, is kind of classification and definition. The second is some challenges around consumer protection. As you said, Kwame, and as Nafisa referenced, these big platforms operate as intermediaries between consumers and a range of products and services. And so regulators face challenges in terms of ensuring adequate consumer protection, determining who has liability for consumer harms in intermediated value chains can be quite difficult in some business models. And so regulators are concerned with things like transparency, fair treatment of consumers, how effectively risks are disclosed, and then some kind of specific tactical issues like how are disputes and complaints resolved and dealt with when you have kind of intermediated value chains. And so regulators have got to try and strike a balance between fostering innovation that might increase access to products and services that serve and delight consumers, with the need to kind of safeguard and protect those consumers. Data, I think, would probably be the third one I would reference. Like, these big platforms handle significant amounts of personal and financial data. And so regulators will have concerns around data privacy, protection, ethical use of data, cybersecurity. And this is a difficult one because ultimately regulators want to see more cost-efficient, data-driven financial services. And yet data-driven financial services lead to large collections of data that have their own risks associated with them. Nafisa's mentioned AML and crime. Clearly, that's another risk that regulators have on their mind. Money laundering, by definition, involves layering. It's one of the 3 steps of money laundering is layering. And so intermediation is a form of layering in financial transactions. And so platforms can be used to hide or attempt to legitimize illicit money used for terrorist financing and other issues. So that would be another big focus for regulators. And then the final one, I'll just name 5. The final one would be concentration concerns. So the business model and the intention of platforms is to kind of consolidate power and consolidate activity and relationships and business in relatively few large dominant players often. Platforms do well when they have sizable market share and when they achieve market network effects. But this can present risks and challenges around kind of systemic harm if you've only got relatively few players providing significant range and number of services to the economy. But it can also present challenges around kind of competition and choice for consumers in the medium term. And there's other ways in which big kind of monopolistic players can abuse their power. So that would be another issue for some regulators, would be this kind of concentration and competition risk. I was only asked to speak about the downsides. So I'm just to give a sense, I don't only have negative opinions of these businesses, but that was my question. So thanks.
Awesome. And I mean, interesting challenges there. You've given us a tall list. And so now I'll go to Mr. Issa Ali Yushata. Please give us a 2-minute introduction of yourself and how you are impacting or working within the fintech and ecosystem space. And then thereafter, I'll throw a question at you. Thank you. You, Issa. Your profile says it all when you say that your firm does card issuing and acquiring, and you're also the vice president of the Association of Mobile Payments, as well as the president of Digital Financial Practitioners in Nigeria. That's a very big portfolio. And then we would like to follow up with the question that we asked Nick. Do you, in your work line of work, what are some of the key challenges you faced, particularly with the trend of fintechs coming on mainstream financial sector? Thank you, Isa. One thing that keeps resonating is that you all mentioned some key issues when it comes to challenges that the regulators face in regulating the fintech space. Initially, Nick mentioned classification and definition, consumer protection, data, AML and crime, and others. But one thing that you have actually given us an insight into with practical example within the Nigerian context has to do with collaborations among the regulatory bodies, because we see a lot of silo activities when it comes to each regulator doing things on, within the fintech ecosystem, trying to regulate it. So with that, when from your submission, when they collaborate, it will allow for smooth automation and then supervision, which would benefit the ecosystem at large. So thank you, Nick and Isa, for those amazing pointers when it comes to some of the key challenges that these regulators are facing. Now, I'll come back to you, Nafisa. Now, since you are at in the seat of the regulator. Now, with all these challenges, how do you think they can be effectively addressed to ensure consumer protection, as mentioned, financial stability, and a fair competition within the fintech market or ecosystem?
Okay. Thank you. So, like, from all the conversation, Nick started from mentioning, he even layered saying money laundering is a layer. If something is a layer, different categories, right? We mentioned even consumer protection is a layer, different categories. And then Isa went on. I like the fact that Isa started with mentioning the motivation where he even entered the sector. He entered the sector from the National Financial Inclusion Strategy, which started in 2012. So you see, the National Financial Inclusion Strategy started in 2012. We have that one that started in 2012, is the one that started in first volume 1, volume 2, volume 3. So can you see the way? Different categories. So in what we're doing is everything, like when we started we didn't have much of disruption. An example is, okay, let me say Tunji is an operator, right? Tunji, you're an operator. So if I use artificial intelligence to regulate you, Tunji, I remember Isa saying, we some of this, just yesterday I read microfinance, most of the microfinance, you heard about the news, their license are being revoked, lack of compliance. So we have come up, that's why we have the INERA. We've come up the digital currency, trying it, the sandbox, the what I will echo largely here is the innovative sandbox, which I really wanted to play the video, the innovative sandbox. So if you're innovate, go there. Let's in that environment, let's there, test it, let's see. How will the competition be? How will the compliance be? How will the data protection be? But nevertheless, like I mentioned in one of my slides, if you remember, I have so many. I said apart from the National Financial Inclusion Strategy, we have now the fintech strategy itself on its own. That's why at a larger end, we need, as a country, we need an isolated fintech strategy. But even in that fintech strategy, remember, we have to have different categories. That's where the know your, because the KYC comes in for that, for consumer protection. You have to understand your consumer, because even the fintechs, like I mentioned earlier, financial literacy did not moderate, because research has shown that some of this fintech are high end. So even the regulation need to be tiered, and we are doing that. That is why currently, Isa, you mentioned for mobile money, we had regulation for mobile money, but now you need a regulation for fintech. So we've come out, like recently we have the Nigerian financial industry, the National Financial Industry Cybersecurity, where that's a project that is ongoing, which will just for the industry itself. So we have a lot coming up, like the INERA, like I mentioned earlier, as a country, I think we're doing, but the bottom line is compliance. So even the compliance, we need to tailor it. Like Nick mentioned, cross-border. I think I've heard many from Isa and Nick to cross-border. What if the regulation in Nigeria, in this jurisdiction, like I mentioned, I'm talking from Nigeria's perspective, but I'm studying in UK. While studying, I read a lot of things. That is why, if you remember, I said in my my research recommendation, it's a holistic, a global standard for fintech regulation, so that interoperability, cross-border, all you don't have to have that issues of that. So but as a country, we're doing a lot. Like I mentioned, we have the e-NERA, we've done it, we have segregated a lot of regulations coming on. But I think the key point for me here is the regulatory sandbox, the innovative regulatory sandbox that we have.
Lisa, from the regulator's point of view, would come to the regulatory sandbox later. But one thing that I have picked up is that you mentioned that there's the need for all the various categories of regulators from CBN, or in Ghana, the Central Bank of Ghana, which is the Bank of Ghana, and other allied institutions that are regulating the fintech space. There should be a national fintech strategy to spearhead how all these regulators act, so that they can unite or be united in their efforts to achieve one objective, a unified objective. Now, on that note, I'll come to you, Bukola. Please do give us an introduction, and then we can then go on with the question. Thank you. Thank you, Bukola, for that. I see that MTN is actually doing marvelously well in Nigeria, and especially in Ghana as well. And the strategy for them now, like you rightfully mentioned, is to move from a telco to a techco. Now, my question to you is this: we have our initial panelists have mentioned some things that I think relate to all of us. But one thing that we have all agreed to is that fintech companies often operate within a broader ecosystem that includes traditional financial institutions, technology firms, like your company itself, MTN, where you indicated that you are undergoing some payment strategies, regulatory bodies, and consumers. Now, the question specifically is, how can financial regulators strike the right balance between fostering innovation and competition within this ecosystem while ensuring adequate oversight and safeguarding the interest of consumers and the stability of the financial sector? Bear in mind that Nafisa already mentioned a national fintech strategy. Thank you. Thank you, thank you, thank you. Wow, that's very interesting because you mentioned one of the key things I took out was the fact that we need to secure the consumer, and that is very should be very important in a top gear or top priority of the regulators. And we should avoid, particularly knowing or having in mind that the go-to market strategy for fintechs are very quick and fast. We should try to eliminate long processes in validating their platforms when they have developed products and services. And now that takes us to the regulatory sandbox initiative. So on that basis, I'll come to you now, Tunji. Please an introduction, and then we take it from there.
Yes, Kwame, thank you very much. I hope I'm audible.
Yes.
All right. I'm really delighted to be here this afternoon. Thank you, everyone, for joining Regtech session. My name is Tunji Odumoboni, Executive Director at MTech. We are really passionate and excited to be collaborating with central banks across the region of Africa and globally as well, and working on the other hand as well with fintech. We do believe strongly at MTech that the world of digital financial services, where technology is enabling emerging business model, require modern central banking. So our focus is really enabling that modern central banking paradigm with technologies that are fit for purpose, that can enable fintechs to learn and scale. On the regulatory side, there's a lot of talk about how regulation can be an enabler if deployed properly. But we all know that it's been challenging for some fintechs, particularly startups, when it comes to getting to market with their innovative products. The regulatory requirement could be inundating as well, which is where, for us at MTech, we see the opportunity and, pioneering the digitization of regulatory sandbox. And a lot of things that have been said by the panel is really what we are living to express in terms of creating digital platforms that enable regulators connect and supervise fintech, and not just fintech, even the traditional financial services players are innovating. And when you innovate, whether you are an incubator or a startup, you are creating product that could have inadvertent risk in the market. So enabling the regulators to also leverage technology on one hand to manage the regulatory and supervisory process, and on the other hand also driving inclusive financial access for fintech, enabling central banks to deploy new payment rails like CBDCs that brings in a whole new ecosystem around payments. So that's the space we play at MTech, and really privileged to be trusted already by a number of central banks. We started with Bank of Ghana. Now we're working with Central Bank of Nigeria. Um, Later this week, we'll be announcing our brand new partnership with the West Africa Monetary Institute that also enables us to deploy and work with similar regulators within the region. I think Mr. Issa Aliu spoke very deeply about the opportunities that comes when regulators collaborate, and we see that as well. So that's a little bit about me. I'm really delighted to be here.
Thank you, Tunji. Now, one thing that resonates in the work you do or in the role you play is that you provide more like the interface for the regulators to more like provide that sandbox, regulatory sandboxes. So MTech is big on regulatory sandboxes and deploying these solutions in partnership with central banks, like you rightfully mentioned, that you currently have one with the Bank of Ghana, and as well as you are working with the Central Bank of Nigeria to deploy same solutions. Now, when it comes to regulatory sandboxes, you bear with me that um, they have emerged as a mechanism for to foster digital innovations in the fintech sector. Now, how has the introduction of regulatory sandboxes influenced the development and adoption of new technologies and business models in the financial services industry, particularly for countries within which MTech has deployed some of these solutions? Thank you.
Great. I think first of all, when you look at the way regulatory sandboxes get defined, it tells you a lot about the possibilities. It's a controlled space where innovation can thrive, but under the supervision of a regulator. And what that really means is that the possibility um, to sort of prior to the paradigm of regulatory sandboxing, it's been much about wait and see, because we know regulation will always lag innovation, and the technology that powers this innovation at times they come with their ills as well. They are not always intended for bad, but at times they prove bad. And that's why, rightly so, in a space like financial services, where people's means of livelihood depend on that payment, lending, people invest their fortune. You have to be very sure that you're allowing the right players with the right tech to play in that market. And that is really one of the, for me, one of the game changing opportunities you have with regulatory sandboxes. That you don't really have to wait for what will not happen, because there's no way you can learn if you don't on how to regulate this emerging business model powered by emerging technology. There's no way you can learn as a regulator on right framework, the right rules to set if you are not aligning those emerging business models to even within at a small scale to play in the market so you can learn what works, what doesn't work. So the first thing you see when you see in an environment where regulatory sandboxes drive innovation is that there's a lot more openness and interaction between the regulators and the fintechs early on. It's always a platform of engagement. If you're a startup and starting up does not mean you have to have all in the world. You could even be a student in school that just has an idea, right? With technology, and one of my strong tenets and belief is that the same way technology is enabling financial services, regulation needs to be enabled by technology, and not just your legacy tech, and we have a lot of that, but modern tech that enables insightful visualization of risk. So how does data flow into a regulatory sandbox, and how does the regulator get very near real-time view of what is happening in the market as this product get deployed? Some of those some of those inputs then shape the kind of rules to be set, the kind of regulation, and what you then see is even an investor perspective. Investors want to know that they are investing their money in entities that are on their way, if not already regulated, or on their way to getting some form of sanity in the way they deal the risk management, compliance, and so on and so forth. So you begin to see a lot more opportunities for fintechs deploying whether Web 2 solutions or Web 3 solutions to even scale. Because one of the first things you have to think about when you're thinking about building for um, building products in the financial service, how do you comply with regulation? What regulation exists? And if none exists, how do you work with the regulators to understand what you're building and be able to put fit for purpose regulation in that space? So from a scaling point of view, getting funding that you need to scale as an innovator, one of the things we also see is the legitimacy that can come obviously over time working with the regulators, helping you to prove out your solutions. Those are some of the some of the few things that I can touch on at the moment in terms of what we see how regulatory sandboxes can help innovation to thrive.
Thank you for that. So now, Isa, I would like you to add up to what Tunji just mentioned. As someone who is, on the field, engaging or interacting with ecosystem players within the fintech and digital financial services landscape, please, uh, in your own understanding, do you think regulatory sandboxes has influenced the development and adoption of new technologies and business models in the financial services industry or sector? Awesome, thank you. Now we are having some time constraints, so would like to keep the submissions a bit short going forward now. Now, Nick, with your experience within regulations in Europe and those areas, what are some of the notable success stories? We have identified here that, for instance, in Ghana and Nigeria, regulatory sandbox implementations have not fully taken off yet. Can you tell us some of the notable success stories of fintech companies that have benefited from participating in regulatory sandbox environment, and how did this environment help these companies overcome the nuances of the regulatory hurdles and accelerate their innovation processes?
Okay. Yep. So regulatory uncertainty for most businesses really hampers their growth. Uncertainty can delay their progress. It can consume their working capital, and it can kill a positive innovation before it really has even had a chance to succeed. So one of the roles of regulatory sandboxes has been to provide regulatory clarity and allow entities to test, as others have mentioned, kind of product market regulation fit for an innovation. So that can be really fundamental, because by providing clarity, businesses can develop and implement their strategy, and also investors prefer certainty. So some of the successes that you see in Europe and elsewhere have been around how successful sandbox tests reduce a kind of information asymmetry between an entity and the market, and allow them therefore to access venture and growth funding. They become safer bets in some regards, because they've developed the product, they've tested the product, and they're clear on the regulatory structure. So I can think of a company, there was one called Laka, that was a bicycle insurance startup in the UK. It was in our sandbox in 2018. It had a completely new insurance model, where consumers would make payments in arrears based on claims against the insured pool in the previous month. So you wouldn't pay for insurance up front. You'd kind of join this community, and at the end of the month, all of the claims would be shared across the community, and you would pay a premium then. So it's a completely different insurance model. We didn't have that in the UK before. And so by testing in the sandbox, that company, Laka, was then able to secure backing from an insurance giant, Aviva. It's raised, I think, $23 million in the past 3 years. It's acquired over 15,000 customers. And in the sandbox test that we developed with it, we put in place a series of different kind of caps and protections for the product that Laka itself hadn't conceived of. And that meant that the product was then more aligned with both customer needs, met the regulator's expectation, and then enabled that company to secure partnerships, funding, and customers. I'll give you one more example. I'm conscious of what you said, Kwame, about time. Another company, another way in which sandboxes can be really helpful, and Tunde touched on this, was in kind of bolstering the credentials and establishing industry awareness of an entity and its innovation. So it can help to kind of bring some legitimacy and some brand recognition as well for that entity. And that can be really helpful in then developing partnerships, particularly fintechs that are in the kind of business to business space. So there's an entity called Globacap, which again was in our sandbox back in 2018. It was a completely different business. It was a capital raising platform for SMEs and institutional investors that used blockchain technology to streamline and simplify issuance of securities.
Yeah.
And so at that time, we hadn't seen that kind of business model. They needed regulatory clarity around settlement, record keeping, and some other compliance risks and issues that they weren't clear how to mitigate. And as a result of successfully testing in the sandbox, that entity has now gone on to raise, I think it's $16 million, and it has clients like the Johannesburg Stock Exchange. And they just would not have had that kind of reach and visibility in the wider market had they not successfully tested. So I'm going to stop, given the interest of time. I can give you another example, but I'll let others speak.
Sure, but I'll come back to you, Nick, on the next question. You and Tunji would help me with this one. And that is, when fintechs, enter into the regulatory sandbox, which is basically a controlled environment for experimentation, are they exposed to some potential risk and challenges associated with this approach? And how can regulators effectively manage this risk without stifling innovation? Now, Tunji, this question goes to you, but I'll come back to you, Nick, on the same question.
Yeah, thank you. Thank you very much. I think the regulatory sandbox, as it were, it's a multi-stakeholder platform. So you could think about not just risk to the fintech alone, but even risk to the regulators themselves and the broader ecosystem that is there. I think some of those risks, if we just look at, even from the admission process itself, since it's a controlled environment, it means not everybody's going to play there. So who do you admit into that space? There's been some form of concerns around that I've seen and heard about when it comes to what's the thinking behind which sort of fintechs are admitted, particularly when you have a closely defined court model where the regulator comes out to say, you know what, we are select or admitting fintechs of this nature, maybe fintechs leveraging this type of technology or playing in this type of space in financial services. The thinking needs to be a lot clearer because what that could do is create this at least a perception from the ecosystem, from the broader fintech ecosystem, that certain kind of tech or business model are being favored or prioritized. So from a regulator's point of view, there has to be a lot more clarity into the thinking, the selection process. And also, one of the things we're seeing happen more frequently is transition from the core model to at least an hybrid model that allows for, a mix of um, of fintechs coming in as and when they are ready. So the platform is open. Since innovation doesn't happen in specific months of the year or in specific periods of the year, if I have an innovative product that is ready for regulation, ready to go to market, I should be able to come in. And that's one of the power of digitization because the kind of concerns that regulators have is the cost that is associated, the resource intensity. And a number of these things can be digitized with technology, and that's one of the things we are proving out, working with some of the regulators that are working out with. The process can be digitized end to end when it comes to admitting fintech, defining the rules, even when it comes to the reporting, enabling technologies can enable you to do that, the piping into the platform, the dashboard that enables you to visualize the right metrics as a regulator. Another one I'll touch on, I'll just touch on maybe one or two more. The concept of regulatory sandboxes tend to give the illusion that you have a foolproof and a fully safe solution, but it's not. You have to recognize the fact that you are trying to risk this product. So there has to be full disclosure, and this could be risk to. I touch on the fact that it's not just fintech. When you look at one of the critical stakeholders, the end user. So if I'm going to be using a product that is being sandboxed, do I know that there could be certain risk? And am I open to that innovation? For instance, if I didn't have a solution or an option, the other day I was trying to send money across to a friend of mine in South Africa, and I tried quite a bit to find a solution for that. We know how painful cross-border payment can be in Africa. So if I don't have an option than to use a solution that is still being tested in the sandbox, I can make that trade-off and say, well, maybe there's this risk, but at least I know the benefit I get. I do my transaction. So, but that full disclosure needs to be there because it's still a solution in testing. There could be risk around data privacy. There could be risk around even settlement. You want your transactions to be settled in time, but then maybe it's delayed. How do you mitigate some of those risks? So it's not a foolproof solution in always that, once you have this sandbox, you de-risk everything. Part of that process, whether it's a 6 month sandboxing that the fintech is doing with the regulator or 1 year, whatever, is to kind of identify the risk and for the regulator to be able to put sort of controls in place to mitigate that risk. The last one I will touch on is the point around what does the transition look like? It's not an end, it's a means to an end, right?
So if you think about regulatory sandboxes as a way for you to identify risks that you may not really focus on as an innovator that is really looking at solving problems, but inadvertently there are certain problems you're creating. Working with the regulator can help you look at things like AML, some basic things that you may not really be focused on. Are you managing KYC? Are you managing cybersecurity risk, liquidity risk, depending on the business model? So understanding that it's still a transition phase. And when you exit that sandbox, what does the next phase look like? Because you have to then scale and deploy this solution at full scale. So that's something that requires early engagement, even from the day one, between regulator and the fintech. What does the exit look like? And it's not always a successful exit. If you exit and it's not successful, how do you unwind? Because maybe some of these solutions, you probably have monies of customers with you. How do you transition and unwind that product? But hopefully it's a successful one. But even in the transitioning to a fully licensed product, what does that look like? Is it going to be a tweak to an existing framework? It's not on the 90 or the 90-day sandbox that you have that discussion. That is something that needs to happen on an ongoing basis so that the seamless transitioning from a sandbox product to a licensed product can become a reality.
Sure, thank you. We have questions flowing in, streaming in from the online participants. So Nick, as Tunji rightfully mentioned, the regulatory sandbox definitely presents some form of risk to the regulator themselves because it is a multi-stakeholder platform. In your experience, what are some of these challenges and risks as well, associated with the regulatory sandbox?
I think Tunde covered it really well, to be honest. So some of the points that he made are very key. So sandboxes are very human resource intensive.
Yeah.
And so one of my concerns or one of my observations looking at a number of regulators around the world is many are now launching with the sandbox, and it's actually quite an expensive and labor intensive form of innovation support. I'm not saying it's not a good one, it is a good one, but it's quite a complicated and expensive one. And I think there can be risks of underestimating the complexity of properly overseeing tests in a sandbox, properly evaluating the risks and putting in place adequate and appropriate controls for those risks. Regulators need to have the policy or legislative authority to stop a test at any moment if they feel that the risk parameters have gone beyond something they find tolerable. So they need to make sure they've got that kind of mechanism in place. And I think, as Tunde alluded to, there's also a risk that you can distort a market if you're only working with very few innovators and lending a lot of regulatory support and clarity to just a few participants in the market. You can have quite a distortionary effect on competition in an ecosystem. And so I think Tunde covered most of the key risks, but what I would just add to it is I think these risks are most profound when a regulator only has a sandbox. So getting all of these things right is really key when it's the only service that you offer. There's a really good paper by the World Bank that I'm just going to plug called Global Experiences from Regulatory Sandboxes. And it gives loads of examples of where they have had positive impacts. But that report, and I guess my own view, is that if the sandbox is mainly existing to provide regulatory clarity to innovators, other services, things like an innovation hub or office hours, as it's called in some markets, or some kind of similar engagement mechanism that isn't a testing environment, it's a bilateral engagement mechanism between the market and the regulator. Those mechanisms tend to be more efficient and indeed are sufficient for supporting desirable innovation. So I think a regulatory sandbox shouldn't exist in isolation in an agency. And just to give you a little bit of colour on that, in the UK, for example, we do have a very, very, very busy regulatory sandbox. I think we've had 160 experiments in the sandbox, but we have had 5 times as many entities that we have supported on a one-to-one regulatory support model where we just provide clarity and feedback on their business model and their innovation and their product, but not in a labor-intensive sandbox setting. So we've helped about 150, 160 in the sandbox and about 700, 720, I think it is, outside of the sandbox. But as I say, I think Tunde covered most of the main risks, but this balance of innovation services, I think, would be the one thing I would add.
Sure, awesome, thank you. It's been an interesting discussion, and yeah. Yes, yes, yes. Yes, thank you, and then thank you for that opportunity. Now, in your closing argument, just as someone asked, closing statement. Sorry, closing statement. Thank you. Yeah, I just want to ask each of the panelists, where do they see fintech, in Africa in the next 10 years, in the next decade or so? That's just a closing question. Thank you. So I'll start with Nafisa.
Okay, on a quick note, I will just briefly answer Mariam or a question on financial literacy. We just launched a financial literacy platform called Sabi Money. So I think that's a very good platform for financial education. Wrapping up, where do I see fintech in Africa? I see it profitable, I see it potential, I see it integrating into the central banking system. Thank you.
Okay, so next year would discuss or delve more into Sabi Money. Thank you. Issa Ali Yushata, your closing statement. Thank you. 30 seconds. Bukola. Okay, Nick.
I'm going to answer the question about how do we address limited access to technical resources. So I would say three things. Okay, so collaboration with the market, with academics, with fellow regulators, with international peers. I would say leverage. So regulators don't necessarily think about how they can achieve leverage by engaging in kind of one-to-many relationships and one-to-many experimental moments. So I would give a kind of a plug for things like hackathons and tech sprints alongside regulatory sandboxes. And then I think education is the other thing within regulators. So we have done a reasonable job in the past few years in training small cohorts of experts in many regulators around fintech and general technology trends. But I think we need to do a much better job of kind of raising the base of knowledge across a wider community of regulators. So I think there's something to be said for more kind of digital training offerings to bolster human capital within regulators. So collaboration, leverage, and education.
Okay, thank you. Tunji, last man standing.
Yes, that always means I have nothing much left to say because everything has been said. But I'll just say, for me, I like to look at the next few years for fintechs in the prism of the report by McKinsey. They actually look at last year, I think towards the end of last year, there was a report by McKinsey which says that we're actually at the end of the beginning, so for fintechs. So we're seeing a new era. It's not just a beginning, but getting to this new era where we can see more collaboration across the ecosystem. Fintech regulator collaboration, fintech banker collaboration, fintech collaboration, and what that sort of portend for the ecosystem is maturity. We hope to see a lot more mature fintech that are natively imbibing the right risk management, compliance mechanism, ultimately to provide the right kind of solution that mitigates any customer experience issues. And we look forward to that future. Thank you very much. Delighted to be here.
Thank you all. I see my the host, ensuring that we come off this session because time has been overspent. And so, in my closing remarks, which I have a lot, I wouldn't say all of them here in terms of the takeaways. I would have them on my LinkedIn profile. You can go and read them there. And so, thank you, my panelists, and thank you, Nafisa, for that introduction to your research. I think the takeaways that I provide later would give you some form of, summary into your research going on. Thank you, and then thank you for having us. Have a nice evening.
Yeah. Hi, yeah. Can you all hear me though? Oh, awesome. I mean, no, I don't have much to say. So I've been listening in. I'm dialing in from Pretoria in South Africa and being part of the advisory board for the second year now. So it's been such a pleasure. I do wish I was in Lagos, so I'm really not happy that I'm going to miss all the networking events and the dinners, etc. But just being online, so many insights, and I think the thing that comes out the most is the collaboration. And happy to hear about that we talk about regulatories and we're talking about business, but we also talk about the consumers. So that's been awesome. And I'm just saying happy Africa Day for tomorrow. So I'm hoping all of the participants will still be with us tomorrow to celebrate. And yeah, looking forward to another awesome day tomorrow. And yeah, have a lovely evening. I do wish I was there and joining in all the networking sessions, but goodbye and we'll see you tomorrow.